Good morning, traders. Welcome back to the one and only stream. Getting it right yesterday. I felt like, at least, I looked around. There's a lot of bullishness in the market. Yesterday, we talked about potential pullback day to the trend line. Today, all about the GDP report. And there's a reason why. I think that it's going to help, at least maybe potentially give the lift. We're already seeing some decent action off of this. This could help. And there's a big reason why. We'll talk all about it during the show today, but it's all about consumer expenditure, right? That's what we're looking at here. We're looking to see what happened with the consumer spending, right? Well, on this revision for GDP, we are getting good numbers here. We'll talk also about the jobless claims. Let's get right to the action, guys. It's, of course, trade the pool. Let's get it started. Let's take a look at the action right here. And you guys can see the SPY already getting a nice little jump off of that number. We'll talk more about the action here. But of course, let's bring you guys all the numbers here straight from one of our partners, of course, Benzinga Pro. So let's go ahead. Let's do that. Let's bring it up here. All right, guys. So for GDP, we still got the 2.4 versus a 2.3 estimate. That's going a little bit higher. That's causing a nice little push here. But initial jobless claims coming in at 224,000 versus 225,000. So all good numbers there, guys. And that's really going to help the market get the lift today. We'll see if it can continue that rally. There you guys see that 2.4 right on the screen there. And then, of course, the jobless claims was another concern, right? Because that's what people are worried about. The jobless claims getting a jump, right? Economic weakness. We'll see what happens here. But if you look in the report, there really wasn't anything bad. Consumer spending accelerated here in the fourth quarter. Right? They didn't, not bad at all here on the report. And I think that's the important thing to mention, because that was the concern, right? Would we see spending going down? Of course, this is lagging. This is coming from Q4 of 2024. The real concerning quarter is going to be Q1 of 2025. And we'll see what happens when we get those numbers. But of course, this is the lagging indicator, but telling us that growth was led by higher spending on goods, particularly on motor vehicles and non-durable goods. So that showed me more and more that there was still some buying of those new cars in, of course, the late part of Q4. What will happen in 2025 is the big question. And that's what people are taking guesses on, right? And everyone's talking about what's going on with the Trump tariffs. And we all know that conversation is expanding. So we'll talk a little bit more about it here. We can take a look into the playbook. What's going on in the markets, guys? Big down move yesterday. Will we just bounce back? A little part of me feels like, yeah, we could just get the bounce back. I think they're not going to make it easy, right? It's going to be a little bit of some mixed battle here, but let's see what happens with the market. Can we lift above that 569? We're going to get back to the 570s here, guys. I think it's important to be looking into the outlook that we were watching. We were looking to find a trend line approach, right? Coming towards a trend line approach is very important. Sometimes you get these V-shaped bottoms, right? And so now we can actually start to draw towards that. And there's still an approach there to that exact line, right? Right now we're on that 9 EMA. We could be pulling back a little bit further and then to move back higher. That's the way that I see it right now. The sign of concern is if we get back below this level, right? The 560 level, that's where the danger station is, where I'd be like, okay, well, we got to be worrying about further downside. Back above this level, we could just start to climbing back. So this is going to be our green level. And the sign of concern is a move towards the yellow line. And I'm going to make this yellow here. That's where I'm watching for the action today. Can we get back to that yellow line and bounce off of that? Of course, little moves up here could happen also. I'm looking for a little bit of a shakeout out the gates, and then a recovery towards maybe the afternoon hours. Of course, maybe washing some of the early buy the dips and then looking for the rip later in the afternoon. So just be careful out there. I feel like it's going to be a little bit of some mixed noise. So let's get to, of course, the playbook of the day. Then we'll get to the sunrise. The sunrise is where all the action is today. So let's run through the playbook. First up, the Tesla Dragon, of course, is getting a lot of moves right now, and a lot of big focuses on this stock as, of course, the auto tariffs coming out yesterday. But, of course, it wasn't going to affect U.S.-made vehicles. Now, this could still affect Tesla in different ways, but I think we got to continue to watch to see what happens today. Big day for Tesla, and that's why I say take a look at it. Honestly, trade it either or, right? It could be a down move, it could be an up move. I'm going to be watching this space as, of course, I've been talking about how I felt GM should be down based on the tariffs. And look, finally, GM getting the leak there, guys. I was scratching my head on why this was going up, but sometimes this is going to happen to you guys where you can see an investment thesis, but it's just not playing out. I compare it a lot to how the Big Short was. If you guys remember in the Big Short, what happened? Well, in the Big Short, there was a lot of focus on that he was on the wrong side at the first. And it was even causing some margin concerns for, of course, the firm. And then what happened? Boom, finally the money happened. And that's how it goes a lot of the times. So, hey, here you guys see a trade on the downside. GM will Ford take the hit today. Look how it took the hit and it climbed right back in the morning. So I'm going to be watching to see what happens here, but will they just get the hit right back down? And how will some other automakers start to perform today? How will Rivian perform today, right? How will stocks like that perform? All things to have, right? All things to be looking at. How will Toyota Motors perform, right? Will this take another hit down? Of course, we know that the action was pretty down in Europe. We'll talk a little bit more about that on the Sunrise Report coming up. All right, guys, let's get to the next play here. Of course, I'm going to talk the VXX. Why the VXX? Because I was watching this yesterday, and yesterday I missed one of the biggest moves, and that was a little frustrating because I didn't take the opening action, but definitely this 46 pullback should have been a pullback to play yesterday as it cut down right back towards the 47.76. Good looking move there. I hope somebody was able to capture the VXX yesterday, and we'll see today. Will we get another little hint towards the upside? I think you got to watch to see what happens here, guys. I think it's going to be a little bit of some battle back and forth. We could fill some of the gap first, go right back towards the high, maybe 48.01, and then come right back down. I think it's not going to be easy. Could also just be an inside day. Watch out for maybe a wick up and then it actually closing below yesterday's high or closing action 47.42. So I'll be watching to see what happens there on the VXX. It's going to be a little bit chopped today, I feel like, at the gates. Then we should get a clear direction towards the afternoon. That's what I'm looking for. We'll have to wait and find out, of course. Never a guarantee. All right, let's keep it going, guys. We'll go to the next one here. And, you know, sometimes I'm wondering where to play on these, right? Because, of course, before we get data like this, I have to really kind of take a look at it and think about what else could I be looking at here, right? Well, we'll see what happens here. I'm going to give you guys the one that I thought of. What about AMD here, guys? But I was looking at this on the short side of things because it just seems like every time AMD looks like it's about to get a nice long-term trend line break, it just fails. So I think today's a big watch out the gates here to see if this just comes crashing towards the 103. And then after that, I'll be looking to see what happens there, right? Right around the 103 area is around this support area here towards this gapping area. And it doesn't have to be exactly there, right? You can see that's 102.60. But, you know, you can draw to the 103 if you just want to be a little bit less, like looking for a bigger move there. But around the 102.60s, all the way up there towards this closing body, which is around the 102.90s. So that's why around the 103 to, let's say, 102s, we see some support in AMD. Will we just come crashing to it? We'll have to wait and find out, but that's what I've been seeing. Seems like this stock just can't hold any rallies, right? A big part we'll be watching if it can get back above the 9 EMA, which is around the 107.74 on the daily. Can it get back above that 9 EMA, or will it just take the hit right back towards the support? Big watch today, and it's a lot going to just depend on the market overall. Going to see that back and forth action today. So one of the things that I would say today is definitely keep the SPY on more of that hourly approach. Be careful with going too much in the smaller time frames because we could get wiped out on fast moves. So where you just react. Oh, no, now it's going up. Oh, no, now it's going down. Be careful out there, traders. All right, let's keep it going. Let's get to the Sunrise Report where we take a look at why stocks are moving, of course, what's out there, and, of course, Is there news? Where's the news? Show me the news, Money Mitch. All right. Of course, investors have their eye on the jobless claims that came in, and they were a little light. So the not bad numbers there. Key PCE inflation report lands on Friday. So tomorrow, keep your eyes on that. And a GDP revision that could shake up the market sentiment, but instead actually helped it a little bit here on the bull side. We'll talk about the tariff tensions, of course, rocking the auto stocks. So we got to stick towards those stocks at first. General Motors taking the biggest hit out of this, of course, as stock futures were mixed on Thursday as President Donald Trump unveiled 25% tariffs on foreign-made cars, a move that, of course, rattled the auto sector, a move that I was already expecting. And it just seemed to me like, when was it going to happen, at least for GM? And there's the fallout, about 6.5% in pre-market and going lower, could be crashing down. One of the things that I think is really going to go negative against GM is that there was a lot of positive outlook into this stock. There was a lot of analysts that were like, oh no, it's going up. It's a great year for it. Great year. Well, watch how quickly they flip. This is why I call them lemmings, right? Because a lot of times the analysts just chase price action. And so in this case, watch how they chase the price action down. They start lowering price targets here. And now it's going to be based on the tariffs, right? But you weren't calling for this a month or two ago, right? And so we'll see what happens there, as we'll also be watching to see what happens to Ford, right? Trump's stance, of course, the tariff applies to all non-U.S. made cars, no duties for vehicles built in the U.S., and the tariffs take effect on April 2nd, with collections starting on April 3rd. The White House, of course, projects over $100 billion in annual revenue from this move, as Europe is reacting, of course. And in Europe, the stocks really got hit hard, guys. Some European auto stocks sliding here. Valeo down about 5%, Stellantis 4%, and Porsche sinking also. Of course, Trump's Liberation Day, as he calls it, could trigger wider trade battles. Of course, this is coming on April 2nd, next week. And so watch out, guys. This is what you call buy the rumor and sell the news. But instead, it might be sell the rumor and actually buy the news. This is a quote you're not going to hear about anywhere else. Money Mitch bringing you a new one right here. What about sell the rumor and buy the news? That's an interesting one, of course. We'll talk more about that with Michael coming up here in just a second. Let's keep it moving. Let's go out of the auto sector. Let's go to GME, of course, as they gave back some of its recent gains after announcing a $1.3 billion debt raise to buy Bitcoin. Look at that move, guys. It's right back down to 26. Why weren't we just shorting GME yesterday? I should have even been shorting this thing in the pre-market. I saw it around 30, and I was like, man, this thing should not even be up on this, guys. Look at the action down. And what do? They just raise more money on you guys. It just seems disgusting to me, the things that go on in GME. Yesterday up there to that 30, and it was just down she goes, guys. So really not being able to hold that in pre-market, goes back to that in the intraday and right back down. This morning, it was actually even in the after hours, it was down to 25.20s. Could be heading there shortly. So definitely GME taking a big hit down. All right, guys. Jeffries slumping there. Definitely taking a big hit there. A weaker than expected report. NVIDIA dipping, of course, as China H3C warn of potential H20 chip shortages, a key AI driver. So more concern coming in for NVIDIA, as now you're getting supply concerns. And I talked about it. This stock could easily be cracked here, guys. I think this is really a look that we need to start looking at. And this rejection here is big now, guys. So I'm looking at this as being a real red sign here. And we already had a red sign breakdown that was up at the top. That's when we came back to this spot after the head and shoulders pattern that we had. We eventually rejected that. Now we keep rejecting in this area. So this is going to be another area to watch on the upside. If we do get back above that 123 area, that's one area that I'd be watching. But right now, it does not look good, guys. We could be coming in and coming right back down towards the 100. That's where I see NVIDIA heading to. And I'll be watching to see what happens there as the leak comes in for NVIDIA. Okay, guys, we'll see what happens on that report. Doesn't look good right now there for NVIDIA. All right, let's keep it moving. Let's go to another stock. Let's go to Alibaba. Of course, coming out with some great news as new open source AI models for AI agents, and it's a cheaper one. And I think this is something to keep watch, guys. Of course, China's been on a little bit of some pullback action the last couple of days. A lot of this also not the best economic news coming out of China, but I think that this is just kind of one of those that you just got to hold on, guys, and try to keep riding the wave. Right now, we could come back towards the 90 EMA on the FXI and then make the next step up. But I'm continuing to watch it today. If we could have a bullish day, at least where the market bounced back, FXI and these China names could be in play. Of course, AMD is falling on a Jefferies downgrade, and I'm going to continue to watch that, see if it keeps falling. Another reason why it's on the playbook. Let's go to H&M. H&M, and what is H&M's ticker? I think I finally found one that I don't know here. H&M's ticker. I don't trade this one often. H&M's stock. I'll tell you guys in a second here. Oh, that's why it's in the ADR. That's why I don't know it. It's a HNNMY. So here it is, guys. Yeah, this is why I don't know it, but it's really cheap, guys. It did take a hit there. It just shows consumer concerns in kind of retail. And so this is what I would just point to, guys. The ANF, AEO, I mean, a lot of these names, I was even calling Urban to start turning around. It did bounce. This is another name that I'll start looking for further leak down, as it just looks like we're in a little bit of some trouble for apparel and things like that. I'm watching for some further downside to come leaking in. We'll talk more about that, of course, during the show. All right. So, of course, can the market absorb the trade tensions, or will we see further fallout in the auto sector? Of course, we'll be watching to see what happens there. And don't miss tomorrow's PCE report. That's the important thing to watch for, guys, because, of course, that's the Fed preferred inflation measure. So look towards that as being a sign of concern. Is it if it comes in hot and we're seeing inflation spike? Well, watch for further downside action. But it's actually interesting because that could be viewed as positive. There's going to become a point where bad news is good news and good news is bad news. So just be careful with that type of mentality and flipping. That's why it's so hard to also understand the macro, the economic side of the market, and then also understand the trading action. Understand those two things are separate. And sometimes in one day, the market can go opposite of what the overall macro situation is. This is why you need to have that conundrum in your head and understand that you have to have some type of separation. The most important thing when day trading is also understanding what is actually happening in your eyes, like what is really happening versus what you want to happen or need to happen, right, for your trades to go green. Try to pay attention to the price action. They always say that that's the number one thing that leads, right? It's just price action, just focusing on that versus focusing on what you want to happen, of course. That's going to do it for the Sunrise Report, guys. We'll talk more about the markets coming up. Michael Noss will be joining us in just a second. And we got a great guest today. They'll be joining us at 10:30. My man, Michael Noss, bringing in a partner in crime, as I like to say it. Doing markets is not easy, right? So you always got to have these guys that you go to. And Michael does a podcast that he's bringing on one of his favorite guys to come and talk to us today, guys. So, hey, stay tuned. That's going to be at 10:30 today. I'm excited to hear all about this. And I will be hopping out to join the pre-market prep guys. And we're looking to expand more and more, guys. So let us know where you other traders. What other traders do you guys watch? What other traders do you guys listen to? Who do you want to see on this show? like always, guys, we can reach out and get some more traders on here, some other guests. We're going to be bringing on different experts. I'm going to also start bringing on bigger experts, right? The people in economics and kind of the talking heads that you see on CNBC and Bloomberg and Fox News every single day. They're going to be right here, guys. So don't go anywhere. Hit that subscribe button. You see that thing light up as soon as you say subscribe, right? Well, hit that right now, guys. And if you're watching there on X, like always, do me the favor. Hit the like and the retweet, guys. I'm going to do it right myself right now, guys. I like to walk you guys through this because I think it's so important. There's one major way that you guys can show us that you're ready to keep things going here and root us on, right? Well, right here. Just do this, guys. Just go to our Twitter, right? And find our posts, right? And then just hit the retweet for me, guys. That really shows me a lot, guys. That shows me how much you guys appreciate everything and why I think this is very important to do. It shows us that you guys want us to keep going. So I'm going to throw it up here in the chat. You guys click that link and then definitely give us a nice little retweet so we keep growing here. Of course, right here on Trade the Pool, guys. All right, we'll take a look at some other retail names. We'll talk a little bit about what's going on. GDP report that could change everything. There's a reason why I was watching that today, and it seems like we're getting some good up action off of this. Now we got to take a look at the SPY. We'll be taking, of course, a look into the market, see what's going on. Of course, yesterday's pullback. Will we get closer towards the yellow line, or are we going back to the green, baby? Let me know out there, guys. Smash the like. Appreciate the retweet there, Jay Angelo. Appreciate all the love from you guys in the chat. Let's get things started. Start that countdown. Bring on Michael Noss. Calm down the bears out there. And let's get things started on TTP Live. Wants 200, baby. You ready to get back to the trading action?
You aim, you shoot, and make money. It's going to be a great day. You guys know where you're at.
Let's go. Who's ready to rock today, guys? I know I'm ready to rock. Michael, what's going on, man? What happened? What happened yesterday? Oh, it seems like we got a nice little pullback day, a good day for Trump to announce some tariffs. I think it was like almost like he had a technical analyst on his side and was watching the show.
Yeah, I was about to say, did he know about the Anchored View app from all-time highs? Because
he might have some Brian Shannonism in him. You don't know. Maybe he read the book. So Brian out there, if you're tuned in, man, you might have to send one over to Trump with a little signature on that one.
Yeah, because he right at the level, and that perfect. Right? It's one of those. I'm one of those that I think the market just looks for an excuse, right? When it's hitting big levels like that, and it's this is the excuse to sell back a little bit. But right overall. Still nice bounce, still nice uptrend. I'm going to apologize if my voice ends up giving out just because I have a 2-year-old in daycare and I think he gave me something. So we'll see how this goes. But yeah, we were talking about this yesterday and the day before and the day before that, right? The Anchored View app from all-time high and the low right here from January. So as we were rallying up here, kind of saying, hey, maybe a little overdone to the upside. We rallied like 5% in just a couple days and 2 days there. So need a place to take a break. And that's where looks like we're taking a break at. So again, nothing to me is scary at all, right? The gap fill people, I'm not one. I've yet to see the data behind it. And I'm just always skeptical until I see the data. But a lot of people like these gap fills. And we're right there. So if we come back in, it's 564. So we have 564. That would be a gap fill. So I'm watching that today. If we get a little bit more weakness into that, but overall, this is again we outlined this a bunch, but I'll do it again. Essentially what we're looking to see is when we have this pullback, what happens next? What happens after this pullback? So the two scenarios are, right, you bounce and then you pull back a little bit, you get buyers at a higher price, and then you rip it up. That's kind of scenario one. And then scenario two is this is just a giant bear flag, and we hit our head on that and we make new lows, right? And the beauty of trading is if you boil things down that simply and you have these two scenarios in mind, then you're just waiting for one of them to occur. So ideally, obviously for the bull case, is we pull in a little bit, maybe one more red day, and we kind of come into this 260 or 565 area, and then we start to turn around, we bounce, we get back through that level. That's right, the bull case. The bear case, again, is this is just a giant bear flag, and we just break down and we start to make new lows. But we need time for either of those to hammer out.
That we do, and I felt like the 90 EMA pullback made sense, and we looked at so many charts that were extended away from it that I just feel like, this is a common thing, right? And this is one thing that I actually look for when I'm in like a swing trade like that, is that when I get those moments where, like, let's say if I went long on Friday, right, and just on the SPY, just to make it easy here, right? That's that green bar there you see right on that little pullback. Then you get that kind of gap up day, right? A lot of times we're looking to see if we can get a day two move. Well, we got a day two move. It just wasn't as big, right? And then that's usually the warning sign where you have the option. Either do I run to the really quick profits, or do I let the stock pull back to a short-term time frame, like a moving average like 9 EMA, and look to see if it holds? I think that's what traders are going to be watching today, at least is on the swing alert side of things, right? If I was a trader and I got in on those days, picked the timing of the rally as good as I could get it, right? Maybe, yeah, you got it at the bottom there, but very few traders would get that, that red day bottom. They usually wait for that first pullback. And I think Friday was that real attempt where you got a trend line approach. So if you draw a trend line on that, that's where I drew my yellow line. So pretty much running from the bottom into that day, and then going up into like kind of some blank area there, right? That's like the area where I could see things like maybe coming back to where it still holds, where it's still bullish. As long as we're not breaking that Friday low, which is or the Friday close kind of action, like, and I put it in an estimated area around like 560. As long as we can stay above that kind of 560 area, I'm still feeling really good about this.
But yeah, and it's funny how those line up, right? So if we got another down day today and say we filled the gap here, that would also be right near that upward sloping trend line. So it gives you a lot of levels to work with. But speaking of the anchored VWAPs, right? The thing to do now
is anchor it from the bottom, right?
Anchor one from the bottom, and then you say, okay, so the average. And again, for people who don't know, these are moving averages, but moving averages, if you have a candle that is does 100 million shares in volume, and then you have another candle that does 1 share in volume, a moving average treats those as those are equal candles. When it comes to VWAPs, it says, okay, well, the candle that 100 million shares went on has to be more important than the candle that did 0. So we're going to update faster on higher volume. It's basically the way to do it. And the way I always say is it's the average price that a market participant has paid from any given point, right? So if you started dollar cost averaging into the SPY at the worst possible time, the all-time highs, that's your price right there. And also now if you started to say you nailed the bottom and you're averaging your price up, it sits right there, which is also right where the gap is and is also right where that trend line is. So talk about 565-ish is, again, a zone that I think I'll be looking to take a little shot if we can hold that on any kind of a level. And as we talk more and more, and I talk about the game plan of me doing more and more of this kind of intraday swing trading, these are the plans I'm setting up. So if we get to there today and I get a 5 or 10 minute candle that looks good there, I'm going to buy a bunch. I'm going to put a wide stop loss out, and then I'll close it at the end of the day, knowing that, these are going to be longer term plays. Every now and then I'll hit one out of the park. Like the one thing I want to talk about with yesterday, I talked about this. I said, hey, if we reject off this level again, I want to look to get a short. Now, my mistake was I wanted some sort of bounce to short into. I should have just taken the liquidity grab right here. And
Yeah.
those are the kind of trades. These are the days where are rare, right? Most days, I think it's 70% of the day, 70% of the time, the SPY is range bound, and they just measure this based off ATRs. And then 30% of the time, trend days occurs. So this kind of strategy that we're talking about is to really capitalize on those 30% of days. So we need to understand that, some days we'll make a little bit, some days we'll lose a little bit, and that will probably all wash out. And then every now and then, if you nailed one of those and you just walked away for the day, to get a couple percent in one day on the SPY is a pretty big deal. If you did a leverage ETF, now you're talking 3% or more in a single day. Those are month makers, right? Those are huge.
And I think it's very important to talk about those, because I think that these are the ones that I tell you guys that, like, it's the same thing on the VXX, right? That's how I've made a lot of money. It's whether you're looking at the SPY or there's a lot of days where it's going to be range bound, and then there's going to be days where you get this just continued push. And the reason I use the VXX is because I could just get a lot of shares, right? Like if I only have 20,000, well, I can get a lot of shares on that. And on a trend day push like that, yeah, it's going to be tough. Like I was with you yesterday. I was looking for a bounce and maybe made the mistake of not playing that first pullback on the VXX and then riding the wave, right? And I think that the important part here is understanding that when you take these types of trades, it's all about understanding that majority of the times it's not going to go. And then there's times where I need to hold on that break even and just keep that runner going, right? And so one of the things that I've been thinking about more and more is how can I keep playing like decent size, but keep a runner? What's that runner like and what's the amount? I think that's the important thing, because maybe that's more the approach, just continuously trying to play the ranges, but then also leaving a tiny bit for the run, right? And so on the odd time that you do get that runner, you'll get the expanded win, right? And then the odd time that you don't, and the 70% of the time, let's say this estimated, right? 70% of the time that it doesn't give you these big range breakouts, well, then you'll just stay within the majority of the size and take gain, right? So I'm trying to find a balance between there, Michael. But I think these are really interesting because these are the ones that make your account, right? Because let's be honest, because when you catch a wave like this, your equity wave goes from base hits, and all of a sudden, boom, it bounces up, right? And that's what really, I think, makes traders. When I've seen equity waves, it's always like kind of like a ladder, big boom. Ladder, big boom. The key is trying to keep those really kind of those drawdowns, right? Those quick drawdowns, right? But as long as we can keep that equity wave slowly climbing, we can run into a big winner like this and then get that real big boom up.
Yeah, and for me, I don't know if it's breaking up one position. I think it's, and you guys are probably sick of me saying this, but I think it's multiple strategies. So the way I'm looking at kind of the whole day trading thing is that strategy one is the VWAP fade, right? Right now, there's just not a lot going on. It seems like it's more of an earnings season thing than anything, but those I'm going to keep at, those quick morning scalps, trying to make a buck here, a buck there. And then those other ones that I'm looking for a larger move on, then those are going to go a little bit different. So what should happen is that the short-term scalps that you're making are paying for the losses and then hopefully a little bit from the big swings that you're taking, because then you're able to kind of sit back on those big trades. So let's say I already had made, I don't know, a couple $100 on the VWAP scalps, right? They were a loser yesterday, but the VWAP scalps yesterday. Well, then, right, it's that amount of money, or at least part of that, you commit to the longer term swing, and you take maybe one or two of those a day, and you say, okay, I'm going to risk, say you made $200 on the morning scalps, and you go, okay, well, I'm going to risk $100 on whatever this trade is, and then I'm just going to walk away for the day. And most times that $100 is probably going to get hit, and that's fine. And then every now and then I did just a little quick calc here with this one, right? If you risked $100 on this, you would have made 400. So then what happens is, again, that equity curve of most days, maybe you're making 100, $200, whatever, and when we say range bound days, we don't necessarily mean 70% of the time you'll lose. It just means you'll make a little bit or you'll lose a little bit because it's going to close roughly where you enter at the end of the day. Every now and then you get something like this where, again, it's $500 at it. So, and yeah, Rando talking about the ORB alerts. I've been looking at those. I need to figure out what you sent me. The back tester for me on TradingView isn't working the way it is to you. I just need some time to go do it. But that's the same kind of thing, right? And that might be the way to take these ideas.
Yeah.
You know, just to keep it simple, is that you take a 15-minute chart for your opening range break, which is what Rando's doing there, and then you just mark up some areas, right? Say AMD is something that's interesting to me today, right? So we've pulled back here a little bit. AMD's already pretty much closed the gap. I like this long-term trend line. And again, the idea behind these is that you're mainly looking at daily charts, because what you're trying to do is you're trying to predict the whole candle, right? And you're trying to say, okay, where is this? What is the daily candle going to look like at the end of the day? And then you got to figure out an entry. So yeah, for AMD, it may just be something like you let the first 15 minutes settle. You put out that opening range break, and then you take the trade, like this CRVO that we talked about yesterday. The idea here was this came from a swing trading strategy that it's pulling back nicely. I am looking to buy maybe some of this today. And then you're using these longer term charts, and you're just saying, okay, well, if we break, you know, say back above $8 on this today, then I'll buy some and my stop will go at $7, right? And then if I'm right, and it, you know, one of those days you get one, it goes to 10 or 11, and that's great. So yeah, I think, again, the key is multiple strategies. So you come up with some scalping strategies, and then you come up with some long-term hold strategies, and then you just try to balance those in a risk way where hopefully someday all of them won't work. Someday all of them will work. And then, right, those days, what you're hoping is the days that they all work, you make a buttload, and the days that not many of them work, then you just make a tiny little amount, right? And more strategies also helps with something that I deal with mentally, that I don't know, you guys might as well, where it is you revenge trade, and you know, I think is a big one where, you know, you care too much about any given trade, but the more ideas you have, the more alerts and everything, the better, I think, because then each individual trade doesn't matter, because you can trade each individual trade smaller, because again, you have more current. So
All right, guys, I'm starting to see the VXX prop up here. We'll see what happens out the gates here. But a little part of me is thinking that there's a lot of still buy the dip mentality here. So I'm wondering what happens out the gates. Do we try to break that mentality and then start to work our way higher in the afternoon? So VXX chart looking interesting here. I'll show you guys what I'm seeing right now. You can see like kind of the MACD also, kind of how it's like on this nice little pullback after yesterday's action. On the hourly, keeps holding around the support area, right around this kind of, let's say 47, right? We could still get a dip down through that out the gates, and then maybe another rip comes later. But I'm starting to see it get back through kind of like this trend line approach coming back here. So I'm wondering, do we go and we try to make this quick move towards 48? And then a pullback back towards 47 here. It's going to really just depend right out the gates here. What happens? I already see the SPY kind of leading down. So one thing that I'm thinking is quick moves down to that yellow and then starting to recover. So just thinking ahead a little bit here. Of course, opening action is one of the hardest things to trade, but that's the way I'm seeing it. Could we get a quick move down and then a move back up through this? So I would love to see a move back towards like 566, 565s, and then the SPY start to work its way back. That to me could shut out some of the bulls out the gates here, and then of course start to work back as bigger institutions are just using maybe that anchored VWAP or something like that, trying to target these pullbacks with bigger sizing as they wait for the action to come to them. How a lot of day traders, I think, in retail will be out the gates here trying to buy the open, buy the open, buy the open. We'll see what happens.
Yeah, I think we got another day down, right? That's my again, you know, looking at these longer term charts,
Yeah,
I think
this is some
this,
trouble.
right? We've got the trend line that you're talking about. I can draw that in there, but we got the trend line you're talking about. We got the VWAP there. We've got a lot of things going on, and we only from this high, we only dropped a little bit. I know it feels like, especially when you're day trading, this is why you see me spend so much time, even when I'm here day trading on daily charts, is to give you that perspective. You zoom out a little bit. Nothing crazy happened yesterday. It was just down a bit.
The pullback there.
So right,
I think what it is when everything bleeds out, everyone just gets scared.
Well, that was going to be my point. Let me grab this. So a great follow and a great charting platform if you wanna take a look at a little bit more quant stuff. Let me see if I can find this. Is Optuma, and they do courses for the CMT and whatever, and just a great follow on Twitter. And he put out this yesterday. I think I can just copy these into, as opposed to sharing something else. Yeah. So broke down the S&P 500 by breadth, right? So showing that, I'll just make it so you can see the chart there on the bottom. So this is the outperforming the S&P 500 mark. So 75% of members outperformed the S&P 500 yesterday. So that shows that it was really a big tech sell-off, because 1 in 4 underperformed the market and 2 in 4 outperformed the market, and 66% are outperforming year to date. So most stocks are beating the crap out of the market this year. Again, just showing. And we talked about this. This is rotation. That was actually the quote that I retweeted it with just the word rotation, because this shows that the big guys that were leading the market last year, people are moving out of those and they're moving into other names. And
which makes sense. And especially right now for quarterly rebalance, right? It just makes sense, guys.
Yeah, so we're seeing that, and that's really, really a big deal and noticeable, right? Just saying that if your stock isn't outperforming the overall market, then I don't know, maybe you got the wrong stocks, right? Maybe you're focused on those old leaders that you think are going to go through. And then another one that I looked at this one. So this is a study done. Forget the newspaper, but it's showing 51% of investors are feeling there's a giant market crash on the horizon. And that, to me, is the most bullish thing that I can ever see. If over half
it's 51 though.
Yeah, but that's over half of people think, and not just a little bit of a sell-off, but a giant crash is coming.
I think that's just
a meltdown.
Is coming from a bear. That's just always going to be there.
I don't think
always going to be there.
Half the people, and again, you can chart this stuff out. So if we look at let me look at this, the AAII investor sentiment.
Yeah, I just always feel like it's part of just the media, man, and the world that we live in. Also nowadays, especially nowadays, I think it just gets more extreme than it was in the past. So we're gonna move from extreme bullishness to extreme bearishness faster and faster and faster. But that actually gives, and I'll give you like the Bulls some move there. That actually gives the Bulls more ammo, because the way that I think that happens, if the world's going to collapse, it's going to just keep going. But it gives it more time for the Bulls to come right back in, move it from extreme bearishness back to extreme bullishness, right? So I just see it like kind of moving back and forth. But here you guys have some week ending numbers there from the AAI.
Yeah, so you can see, right? Again, everyone's still bared up, and they were the worst bared up, right? March 12th and then March 13th. That was I think the highest bear reading in since like the pandemic or something. Right there. And I don't think it's coincidence that the day after was the low, and then we rip back up. And you would think they would, right? That sentiment following price and all that, but they're still just as bearish as they were kind of way back here on the way down. So I think it's one of those things that any kind of a pullback is going to increase that sentiment even more, and then that's going to be the buying opportunity. Right? Everyone's bared up right now. If they get even more bared up, then it's just probably going to be a great time to buy. And the fact that most of the market is outperforming, I think that's great as well, right? It just sucks if you're looking at your portfolio and you're a Tesla or a Palantir holder or some of these stocks that have just gotten absolutely creamed. But it's not our problem, right? It's one of those that, right, we don't need to worry too much about that because we're faster on our feet. We look for relative strength. We don't buy the weak things, we buy the strong things. So I don't really have any of those things in my portfolio anymore. So yeah, I'm getting more bulled up in long term. But again, today I think it's one of those things where we do need over the maybe today or tomorrow. We need to come in. We need to test this VWAP and the gap fill, and then this area right here. So I personally expect a little bit of a down day today.
Yeah, one of the things that I'm just concerned about is are we reaching the profit taking time of the bubble, of the AI bubble, right? Was this the profit taking time, and now we could go switching over into the panic time, right? I think that's what we're going to be watching over the next couple of weeks. Of course, this is not going to resolve today, but I think that's what we'll be looking for, right? Because if we can keep climbing that wall of worry and holding that trend line, working right back up, well, yeah, then it just puts it to rest. But you break those lows, and that's when I think the panic moment of the bubble could be happening. We'll see what happens with that, as a lot of people are concerned about NVIDIA today. Also, more negative news coming in for the supply. And I think that's one of the bearish charts, at least pretty bearish chart for me, especially after we're started to break that longer term trend line. Now keep holding resistance around kind of the 123 areas, rejected the 120 area pretty fast on this dip now. And now I'm thinking, could we have 100 written all over NVIDIA? It just seems to me like it's heading into that direction. So we'll see what happens.
And again, I think the beauty of that first chart that I put up showing that, you know, 75% outperformed yesterday and most stocks are outperforming the market shows us that we don't need NVIDIA anymore, right?
We don't. There could be rotation to others, right? And I think that's why we keep watching the XLI, the XLF. XLE is not doing too bad either still.
XLE chart is actually like
XLE
long term is very interesting here.
Yeah,
like
that's
massive push up and then just this tight consolidation.
That's what keeps me a little bit in the bear camp, man. It's just the scariness of oil. Because if there's any time inflation went higher, at least I felt like it's because of oil. It wasn't necessarily at first like the prices in the grocery stores. It was the oil prices jumping, and then inflation came later. So I don't know if we're gonna get that other spike in oil prices or where that spike could go to, right? What's WTI trading at? I haven't seen WTI in a little while now.
So yeah, this is oil. Hasn't 69 a barrel, so it hasn't really moved. There's no real spike going on there. I think the spike in energy is more about the oil, right? Because it's all oil services companies. So of course the effect of the commodity will affect them, but also there's a whole bunch of other things that when you're running business, right? Cost of labor and materials and all that kind of stuff. So it is possible for oil to sell off and the XLE to rip. It just means that the companies inside the XLE, which is all oil producers and shippers, that they're making more money, right? And they don't necessarily need the price of oil to rocket in order to make more money. They can do so with like the whole drill baby drill stuff, right? If they're allowed to produce more themselves and they're buying less oil from other countries, that's a way that they could make a couple bucks too. So yeah, but I'm watching this chart. I think this is interesting. We actually have natural gas was decreasing a bit here. So pulling back a little bit. So we have oil up a little bit. We have natural gas down a little bit. When it comes to other energy sources, uranium's at a very interesting zone, but that's pulling back a little bit as well. So not seeing a huge spike as well in just the overall commodity space yet. And the easiest way to look at that, I like DVC. So DVC is just a great one to watch for, because this is across the board. Like I think it's got wheat and corn and right. So if you just want an inflation kind of tracker, then I think this is one to look at, because you can see what happened in 2020. It tracked inflation pretty much perfectly. And then as inflation started to come down in 2022 and 2023, as they started to raise rates, this one came down as well. So I think this is a good one to track, just looking at the components of it.
All right. Trying to help somebody out in the chat, trying to get them an invite link. Just give me 1 second, my friend.
Yeah, sure thing. So So we can go through the list of the things that I'm watching. At GameStop, I have on the list here, but I'm really not interested in buying this too much. But it was one of the only things that were gapping down and looked kind of interesting today. The only reason I don't like buying this is just if you go back on a chart and it has a history of every time it spikes, sellers come in over and over and over and over again. You just have to kind of respect that and say, okay, people aren't really digging this. It's one of those things that's going to be tied to Bitcoin now. So if you're trading GameStop, you've got to keep an eye on the price of Bitcoin. This SLNO Therapeutics is an interesting one as well. The gap up is pretty significant out of this little base, and we're looking for this to potentially fade. GM to the upside. So GM is gapping down and pretty oversold here, under VWAP for a long time. So looking at that. VRT, which is the one that I took and failed on yesterday. I'm still watching that one because it's still selling off here today. If you go to the daily chart, right, it's getting very close to a support zone. So that's another one to watch. And then AMD, same kind of thing. I talked about how I like this one maybe from a longer term chart, but it meets the requirement for the VWAP fade. So mostly to the long side today. However, I just need to see what the market's going to do. And then you'll also notice I've changed these to 5-minute candles as opposed to 2-minute candles. I'm just going to try that, a little bit of a slowdown, and then push out on these ones as well. Again, the idea behind these is we are just fading gaps as they break through VWAP, and we are, risking one to make one, and over the long run, hoping for a 55 to 60% win rate, and then moving on to looking for more longer term intraday swing trades to play off of. So little scalps here, something that I hopefully will be able to automate in the future, and then longer term trades where I can take my time and do more analysis.
All right, guys, we're almost here to the 9:30 time. And what about GM, man? Finally, Michael, I was telling you, there's no way this thing should be up here, man. How the hell did GM holding on here? Well, there it goes. There she goes. And now it's only a matter of time that I think the lemmings are going to come in. The analysts are going to start chasing the price and mentioning, but now we got to change the rating on GM because the price is coming down because of tariffs. I think this was an expected one, guys. I didn't understand the bullishness in GM to begin with. I know that the company guidance was like super bright, and that's what kind of fooled everybody. But you knew these were coming. You knew that at least steel tariffs were coming. Maybe you didn't know all the tariffs that were coming, but man, it just seemed to me like a one that was setting up there, and that's why I was a little confused. Where it was making a 3-day up move while Tesla was dropping fast. So hey, now we'll see it. We'll see what happens today. Ford actually going up though today. That's an interesting one to take a look at. It's actually higher than it was yesterday at the close. It's right around the close now. So we'll see what happens as they get knocked right back down. Find out, guys. Find out. Market's opening here, guys. Let's get after it, guys. VXX already getting a spike there off the low open in 47.49. I feel like it's a little bit too high. It's in the middle of the 15-minute pattern, and I hate buying in the middle. You know what I feel like? A pig. Pigs get slaughtered really quickly, man. Yeah, I'd rather be a bull buying the breakout or buying the dip, like I'm looking for a support, than buying in the middle of the chart, guys.
Yeah, all right. And we just opened, so we need to see a little bit, some reaction, some kind of idea here. I don't think we have anything else today that's interesting at all going on. I'm just going to check here. No, pending home sales at 11. That's a mid-tier event. So yeah, nothing huge. So,
all right, here's a Discord link for anybody trying to join the Discord link. Sorry about that a little wait there, but I got you, my friend. There you go, Derek Thompson. There's your link, my friend. You should be able to click on that and get right to the Discord. If not, let me know if that link for some reason does not work. Ford. Tesla's another interesting one to watch today. I feel like it can move both ways today, guys. So just be careful out there. It's interesting. It's recovering right now off the 270s, starting to make the up move on this. Of course, these stocks are going to be watched today for sure.
Yeah, so far, uh, not a lot, right? A little bit of a bounce, but a very muted opening range compared to what we saw yesterday. It could just be a lot of people waiting for some kind of move. And yeah, nothing so far. We're just inside the 2-minute range. We're below VWAP for the day. We're stuff playing drama.
Drama, the drama.
DRMA. One of these crazy gapper guys. Yeah, I see that one.
Yeah. Not a bad look off the
GPEC.
233 level, but a couple wicks in that area. Could be a seller towards the 240s. And you can see it getting hit right now quickly. So it should be probably look for on the tape around a repeat seller towards the 240 area, 239s, 238s. Seems like that was showing up on drama. Ooh, look at the VXX takeoff here now, back towards the 48. It's one of those where, like, I hate playing right out the gates here, but there's the SPY now heading right back down here. This is kind of the area that I was talking about, and it's making the move fast to that yellow line here. So we'll see what happens. Can it make the move all the way down there to the 564? But definitely pull back there on the VXX. Might have been the shot there. Shouldn't have been watching drama.
So here's a good example of why I'm doing the 5-minute instead of the 2-minute. If you look at AMD, technically triggered on the 2-minute and then just stopped out almost instantly. So yeah, with these, I'm just looking more on just the long, zooming out a little bit, longer term chart. Need to see above VWAP, and nothing's really triggering. Again, GME maybe, but I just don't. I'm not too interested in that one. The gap's A, not that huge, and then B, it's just GME always goes down. Just every time there's a gap, every time there's something interesting that happens with GameStop, it gets sold into. I think there's just people still from the 2021 meme stock era that are, every time they look at their account and they say, oh yeah, finally it's back to green, they just hit the button and get out.
I wanted to short AMD today, so that up move at the gates here doesn't look too bad there. I think it could get to 103. Just a little frustrated. I can get VXX, and I don't want to jump up here at the 48. So I'm trying to look at other plays on the short, but already missing a lot of the action on the trade. XLE going down there, XLF going down also. So a lot of the sectors coming down with this.
Yeah, the SPY is flushing to that that post market low. So I'm going to be interested to see potentially what could happen there if we end up holding. And is that just, are we going to do the opposite of yesterday, liquidity squeeze and up? I don't know. It's one of those, again, I'm betting more on the downside. I'm with you there with Mitch with anything. Just, we talked about this all morning, right? We need to come in. I've got these areas kind of marked up. I can actually let's put an alert in there as well. So if we get there, that might be an interesting place to take a buy, but we need a pretty solid flush to get there.
Yeah, XLE going down fast there, guys. SPY going down fast here. I'm a little frustrated, guys, because this is a play I should be on top of. I wanted to be on top of it out the gates here, and definitely missing the action. So I get annoyed now because a lot of my rules are not chasing, and at this point, I'm buying the breakdown versus where I should have been shorting near the resistance, right? And so it's just one of those where I have to, like, my miss causes me now to be hands off versus action on. And I should have been action on right out the gates there. And so now if I go jumping in, my experience tells me that I'm just trying to chase. And then that's just going to cause the pullback action to be the kind of the area that I miss. So what I can look for are VWAP rejections here or VWAP bounces on things that are inverse. So we'll see if we get any, but the idea was opening action. So then now I'm essentially doing a different style trade and trying to catch the same direction.
Yeah. So if, it's one of those, could be undercut and rally of this pre-market low, that is something to keep an eye on. Again, I want it a little bit lower. Ideally, my trade, the thing that I'm looking for is this, 565 or so. A little bit of a flush through 565, and then a bounce from there. That's where I think I'll look to get involved. But none of all these stocks that I'm watching on my list are just tracking the market at this point. So none of those are looking to trigger. Again, looking at this, if I looked on a 2-minute chart, AMD would have triggered, VRT would have triggered, and GM almost would have triggered, and they all would have gotten stopped out. So again, just more evidence that, hey, sitting back and zooming out a little bit might be the move. So there we are, getting close to that AVWAP. So I'm going to watch that there to see again if there's any kind of support that happens if we get to that zone. Not betting on it, but
it sucks being right and not making money on it, guys. I'll tell you that much. Literally, I'm just here just shaking my head because there's so many trades I could have made, and it's just like just not being ready at the open here. That's really what it is.
Automation.
That's frustrating.
Systematic trading. That's
like
why
AMD did the classic like retrace, blow off top and then right back down. It was just a nice one there. Through the 107 was the bet there. You had to hold to 107.50, but it went right to it, right? And it went to 107.49. That's the reason why I went to that 49. I'm sure there was some bigger traders jumping on it through that 107 and then just hitting it, boom, and then it comes right back down. But yeah, AMD already down there. It went to 105.55. Felt like there was a play off that 106, but you had to be like a 106.20s and just too tight for AMD. We'll see if we get some type of bounce now. SPY is going down there. Anchored VWAP getting closer and closer. There, that's puts it towards like what, 564. What do you got, like 60s or 70s?
We line up all of these things that we talked about this morning, the trend line, the gap fill, and the AVWAP. We're talking.
Yeah, it just all made sense, right?
564.70, 564.50, that kind of thing.
It also tells us that we're not the only traders watching it, right? That's what I always tell myself. If we see it, someone else sees it too. We don't have special eyes, guys. We have two eyes, and everybody else has those same two eyes, right? So I think that we're all seeing this, and now it's more of a matter of how much does the bleed come through? How much wick action do we get? So what I'm expecting to see is a lot of wick action through that anchor VWAP. Wait till we can close back above that. That's what I'll be looking for on the rally back action, right? And so there could be like kind of this whoosh effect right out the gates. Towards like 10:30 is where I'm looking for more of that turnaround, not necessarily just right here.
Yeah, and that's the beauty of confluence like that, right? Is that if you're looking for, hey, I'm trading AVWAPs, like that's good, and you can build a good strategy and make a lot of money just trading a single thing like that. But if you're saying, okay, there's a VWAP and there's a gap fill and there's a trend line, well, all you're doing is you're bringing in different groups of traders. You're bringing in all the people who may buy because there's an AVWAP there. And we know that there's a lot of institutions that use AVWAP to fill orders. And then if there's a gap fill, then you bring in a whole bunch of traders that trade gap fills. And then if there's this, then you bring in a whole bunch and so on and so forth with this. So far we are putting in looking like we're trying to put in a little bit of a bounce there. But again, I need to see some action. So what I might do is say, hey, 5-minute close back above this level. That might be shot one with a stop the low of the day, and then see from there. But I need to see that move and again that close in order to get involved there.
Tesla trying to hold the VWAP for a move up. We'll see what happens here. I'm leaning a little bit towards the bear side with the way the market is here, because on the short time frames, it's going to look like a 1-minute bull flag here. Let's see what happens. I'm giving it a chance to do the breakout, which is this 1080 look towards 11 on TSLL. But we'll see what happens there on Tesla, the Tesla Dragon. Will it get back up there, guys?
Yeah, so that's why I was talking about you need those closes, because it looked like we were going to bounce for a second, and then we're just right back down. So in this zone right here, this is where all the focus is. This 564.50, you could say, is probably halfway in the middle there. None of the things that I'm watching are bouncing. So
All right, guys, just went short TSLL there. So essentially going short on Tesla here, looking for a quick action down towards the 1030s, 1040 area. We'll see if we get that quick action here right off the gates there. Not going to let it go back through the kind of the 1077 level. That's kind of the breakout. So it's a quick risk here, about 6 to 7 ticks.
Yeah, SPY continuing to,
yeah. It's on the battle.
Continuing to move. So moving some
there you
charts
go.
are being.
That's how Tesla will do it. It's quick, man. It's quick. Tesla holding there, guys. Tesla holding there, right back to the upside there. So I'm out of there. Took a small one there with some slippage, 25 on the slippage. Got about 2 or 3 cents there on the slippage there. But 1085 coming back there now, looking for the 11 break there. Could go higher. Let's see what happens on Ford. Ford's on the down action right out the gates there. So that pop got shorted into right onto that. So let's see GM. GM also struggling. Yeah. That pop just got shorted into. Ugh, that pop was a gift on GM at least. That was a gift for sure. That's a 15-minute resistance pop right into SPY. Look at that, man. Oh, the VXX was it, man. Oh, guys, I missed it again. Oh, man. This should have been an easy buck in the cash right there. Oh, the pattern was pretty too. And right out the gates, we did get this like kind of pullback. We went to this kind of time where we could have got that pullback look off the 4740s. Oh man, that's a miss in my book. That's the one that I'll tell you guys what frustrates me the most. When I have like a nice level, I'm looking at a trade, it's perfect, and then I just freeze up at it. It just freezed up at it. That was a really nice trade there. Tesla pushing, guys. Tesla is pushing there. It could help the market start to come back at some point. But look at Tesla there, guys. Boom.
Yeah, wild that's just going so contrary to the overall market, right? Showing that there's
a lot of people are saying that Trump specifically turned the deal to try to help Tesla. So that's what I think is happening here underneath the books. A lot of investors are thinking that while everybody's looking that way, right? Trump's telling you to look that way on Tesla. So we'll see what happens here. How much can it run today will be a big sign of that. If we see GM down, let's say 10%, but we see Tesla up 10% today, right? That could be a telling sign there. So watch it, guys. Watch it. There's a reason why I played it short there, but on my playbook, I said long. So just to give you guys the perspective of what's going on here too. So a lot of investors are feeling positive about Tesla today. That's an interesting question to see. So watch for the price action to show you it if they really want to hold it.
So SLNO was the first one to trigger from the gap fade idea.
I'll pass you up there here.
Just taking that.
I hate this whole pulling off thing.
Right. So again, switching to 5-minute charts, just again slowing things down. So here, right, very basic idea. This Bing had a massive gap up and ran a little bit off the open, so sucked in the people who bought the pre-market highs, and then triggered our little blue arrow from the little algo I have here. So take a short, stop the high of the day, targeting 1-to-1. We'll see. AMD is getting potentially close, maybe triggering to the long side. Very interesting that this is doing so much better if you just track from the open than the SPY. But really, the SPY's got to be the thing to hold on in order to make things interesting here. So we're coming back up. We just bonked our head on the post-market low, and then maybe looking to reverse a little bit here. So again, just watching all of these systems I have in place. I actually lay out all the charts down here below me, just because sometimes I find the morning trading view can, when you have your own custom indicators, it has to calculate every time you put up your chart. So it becomes a bit of a nightmare. But yeah, relative strength in Tesla. So these are the kind of things to look at if you want to be trading for the long term, is just look at, you know, the relative strength and relative weakness of different markets at different times. So you know, the relative strength in AMD is interesting here, but again, it doesn't matter if the market doesn't participate with it, right? So yeah, rejecting from that level again. Yeah, I think the 5 minute might be a way to. So right, it's one of those things. We can talk about this a lot later, but it's always trade-offs, right? Me waiting for these 5 minute charts, it means I will probably get stopped out less, but I will also I'll miss a lot. So it's just, you got to ask yourself, are you okay missing a lot in return for taking less hits? And I think probably, yeah, for my psyche. When something like this is automated, and you could actually build multiple systems, you could say, okay, I want to take the 2 minute, and then I want to take the 5 minute, and then I want to take the 15 minute, and to split the risk up into thirds. And then if any of those hit, you'll end up doing okay. But
all right, going to look to see if we're going to get one more down action here. It'd be a quick play, like scout back up on the VXX back towards the highs. But like I mentioned, this is where it gets tough, because it's like a completely different trade than the open trade.
yeah, so,
all right, taking it there long a little bit here. Going to risk like 10 cents here. Let's see what happens.
Yeah, because we're coming up to VWAP and we're bopping our head on that post market low on the SPY. So if we are going to fail and reverse lower and do another leg down, feels like this is probably the place to do it.
All right, let's see if we can get a quick pop here.
GM fighting the market, which is very interesting. Again, this is what the whole point of this strategy is that you're looking at things like GM, that bad news, they had the whole night to price that in, maybe. Right? We're seeing this recover a little bit faster than the overall market. So again, I need the candle to close. And then if the candle closes, then I'll look to get in this one as well. Just always one of those kind of, got to force myself to take every trade. It's part of being systematic. Speaking of, in 40 minutes from now, get the co-host of my podcast all about systematic trading on, someone who's way longer in the game than me. So if that interests you, definitely stay tuned. It's going to be a really cool chat, I think.
All right, need to see the bounce come in here and the Qs, the SPY get weak again here. If not, I'm going to have to go ahead and get out there, guys. SPY coming back fast now.
And GM is holding. It's holding for now. My SLNO is just kind of popping around break even.
I got a trigger on me, 23andMe, the bankruptcy stock, getting a lift.
Of course it is. It's Reddit picking that up.
It could be, man. You know how it is, man. The bankruptcy stocks, they get hit and then they get a move up. It's just weird. All right, guys, taking some pressure here in the VXX for sure. It's really on the break here. So watching the SPY to see if we get a move right back down. If not, we could start to actually lift off. NVIDIA doing pretty well there. So it could be one of those days where, yeah, my opening trade was the better idea. So we'll find out right here.
Buying power.
Yeah, getting that wash right now on the VIX here. Gonna have to take the hit here in just a second.
So I took GM there to the long side. You can see just there. AMD triggered as well, but I was trying to punch in. So try 100 shares, no, 50 shares, no, 40. I'm out of buying power. And then VRT actually triggered here as well. So a lot of these names triggered. So again, we take them and then we go from there. So unfortunately, didn't have the buying power for AMD, which probably gives it a 100% chance that is going to be a better one. I had to make a choice between GM or AMD. And I chose GM. So knowing my luck, that'd be different. Hindsight, right? And this is again things that you automate. When you automate things, is you would just, if there was multiple triggers at the same time, you would just split your buying power up evenly amongst them. So if any of them worked, Right? You're kind of diversifying there in that stage. But again, that all comes down to the SPY, right? Oh, SPY. We got that 5-minute close above the pre-market low, just like I was looking for. So now let's see if we grind up a little bit. And hilariously enough, if you look, that's the AVWAP right there. So have I converted everyone? Is everyone an AVWAP person now? We rejected the AVWAP from the highs perfectly, sold off all day, and then hit the AVWAP from the low perfectly, and then put in a little bit of a bounce, enough to take some profits on at the very least if you took it there already.
All right, at least getting some type of bounce here, some action on the downside on the SPY. We'll see what happens here if we do get a flush back towards the low here.
See, I got my SL&O short and my GM long, and I'm out of buying power. So I couldn't do anything if I wanted to, which isn't necessarily a bad thing. Something else I'll look to. I keep making notes on things to ask Dave. He's got a bit of a mentality that if you don't run out of buying power every day, then you're doing something wrong. It's like you should have orders out at the very least. If not, right, just fill across many different ideas and many different securities and in uncorrelated strategies, and just have them out there. And you have your buying power as a resource, and you should utilize it. That's kind of the idea.
Yeah, I don't think that's a bad mentality, as long as you do what he said there, right? It's just diversify a little bit there too. Look for different plays. One of them might work, two of them might work, but as long as you got good risk to return, it could all work out and balance out.
Well, and again, especially the mentality a little different with a fully systematic trader, right? That he looks at it mathematically and just says, if I'm not putting out enough orders to completely max out my buying power, I'm doing something wrong, right? I should come up with more strategies to put out more orders that have edge, and just spread that game out as long as I can.
Took half the size off there on the VXX long there. It was just hanging out here way too much. So it's just trying to lower some of the risk here if I do get the wipeout look. And there it is. There's the wipeout look here. SPY strong here, guys.
Yeah.
All right. Stop set there. Probably going to get hit here. And this is going to be one of those where it's like, man, if I would have played the opening play, probably green here. Trying to play the pullback on it. And it's a tough day to play the pullback on it. If anything, coming back here for the 10 a.m. move, it looks like we're getting that move, right? And so we'll see what happens if we get that 10 a.m. move up now. And so it seems like we're holding in there, at least on the daily too. You're getting that nice approach there towards the trend line, and now starting to come away from it.
Yeah, so it's interesting here. GameStop just can't participate in this long. So I'm just going through, and this is the reason I'm noticing this, right? GM triggered. Yep. That's the one I took. I'm up a little bit. VRT triggered. Looks a little bit better. AMD triggered. That one would have been the best, of course, because that's the one I didn't take. But yeah, GME just not bouncing with the overall market at all. It's just not respecting this move. So could be. Oh, there goes AMD. Yeah, definitely picked the wrong one. Yeah, so the fact that it can't get moving when the market's just kind of popping like this, there's your relative weakness, right? You want to avoid relative weakness. You want to be buying things that are relatively strong in the market, and you would potentially want to be shorting things that are relatively weak. So if I was more discretionary in my trading, I would say something to the effect of, if the SPY turns around here and starts to sell off, GameStop might be a prime target in order to take that trade.
All right. At this point, just trying to manage the trade, trying to get it back towards that break even, trying to get out and just get out with a minimal hit here, but we'll see if we get a bounce at all. SPY still holding in strong, Apple holding in strong, so it does not look good there. So if anything, I'd be starting to take a look for the strong breakout here. You're looking pretty good on that side of things, on the bull side. And it seems like what I was looking at, weakness out the gates, washing the bulls, and then bulls actually coming back here, making a stand, was the play. It just It's just one of those days where my frustration got to me. I came in on the pullback there, and now I'm taking the beating for it, guys. It's a frustrating one because literally had it pegged and just not trading it.
And yeah, right. We talked about the gap fill, we talked about the AV WAP, right to that zone, and then just ripped.
It's one of those frustrating days for sure, guys. So it is what it is. Probably going to take a hit, and it's going to be one of those I'm done for the day hits before 10 a.m. and that's not good at all.
It never feels good, but it's part of the game.
Yeah, it's just frustrating because I had it pegged there out the gates there. I need to stop hesitating out the gates there and just taking the VXX there right out the gates would have been the trade. So it is what it is. 15-minute throwback look is right here off the 47.25s. We'll look to see if it holds it, starts to break that. That's when it really starts to let go on the VXX.
Yeah, so obviously if we still lift here on the SPY, what I'm watching is the 2-day VWAP and the pre-market high is 569.83. The way this market's going, an undercut and rally there makes a lot of sense, right? But it's just one of those broke down off the open, ripped her back to new highs. I wish I had some amount of buying power in order to take that trade, but I didn't. So I'm just dealing with the two that I got. My SLNO, I'm down a little bit on. My GM, I'm up more on. So, slightly green day for me so far. And then we'll wait until I get some buying power back by getting out of one or two of those positions, and then we'll go start hunting for that long-term swing trade. I think the goal is going to be to take one of those a day, at least, and just take it right as kind of the show's ending. This is the one that I'm looking at, and this is what I'm looking at happen. Punch in the order and then shut it down. Hit that little lock button like you talked about, Mitch. I was playing with I was talking to someone, let's put that with some other firms that exist out there in the future space, and you can actually hit a button that locks you out for the day and there's nothing you can do to turn it back on. I'm like, oh, that sounds good. Sometimes when those emotions are running high, to say that's enough.
Yeah, that's enough. You got to have that trigger, right? It's usually what I call the max pain point. And everyone has that max pain point. But it just gets just drilled and your brain stops working.
Yeah. Yeah, and you can go, and eventually maybe we'll try to find like a trading psychologist person to bring on, but they talk about that all the time. Your lizard brain takes over, right? When you're like that. You're not thinking rationally, which again is one of the reasons I love prop firms and trade the pool in general, because you got a max stop out on the day. You can't blow yourself up in a single day. You just can't do it. You can hurt yourself, and that sucks, but like they'll actually stop you from going crazy, where if it was your own account, there's no boss, there's nothing out there to stop you and say that's enough. Some brokers have actually implemented this, where you can call them in advance and say, if my account goes down more than X a day, liquidate everything.
Had to take the pain there, man. Had to take it. Oh man, it's a frustrating day today for sure, guys. And that is as not to do it. The setup was there. Literally, the setup was there. Just did not play the setup on the pullback. Then tried to play it on the bounce and just get into wash. Right? It just seems like that's what was going to happen, and that's exactly what played out. We'll see what happens there. VIX pulling back there. Just a frustrating day now. And Tesla takeoff there, 279, holding in well. GM coming back there, Ford coming back there. So right now things are looking good. Nvidia coming back, Apple going back here. So XLI, I'd kind of keep an eye out to see if you can recover. XLF, you can recover. So you're starting to get the recoveries all around, even in XLE. So we'll see what happens here. But man, the SPY moved down, and then just playing that should have also been a move there, right? So it is what it is. Definitely had the right mentality today, just not the right execution. And you'll pay. You'll pay. Even having the right ideas doesn't mean you're going to get the right play there. So it's one of those days where it's going to be a frustrating one for sure. Easily had $1 out the gates. It would have gave me what? A nice $300 win. Instead, I'm down 221. So that's just how it goes.
Just how it goes, right? Just the nature of the beast. We have to, you know, and I think it's important to talk about like, well, you know, when those happens, what's kind of next, right? So you go kick rocks, right? You lick your wounds, you get a little bummed for a bit, and then you sit down and you think and you say, okay, well, don't want that to happen again. So if I have these plans on the open, what's the best way to make sure I have some? Maybe it's setting orders that, you know, to go live on the open. Maybe that's you know, setting alert somewhere so you see them, right? You know, and you take the opportunity and you get a little mad, and then you grow from it, right? You push on, and that to me is the difference between successful and unsuccessful traders. Unsuccessful traders will come back and they'll try to do the same thing again. They'll just say, okay, well, I'm not gonna journal it. I'm not gonna document it. I'm not gonna record any of the trading. You know, I'm just gonna
taking my eye off the trade too. I think you know, was watching their drama out the gates there instead of staying on the VXX chart that I had up, right? So I changed it over to drama. By the time I looked back, the stock was already making the move, right? And so that's how easily one look away can get you. So this stock wasn't doing anything, but I tried to break it down really quickly, and by the time I looked back, VXX was already at like 4780s. And I wanted to take it off 4740s, and that was the buy today. Buy area was 4740s, right?
Mm-hmm.
Even in this area, right, could still be a buy area. It's just when you get caught in the middle, and I literally said it. I was a freaking pig today, guys, and pigs get slaughtered. Where do pigs buy? In the middle of the chart. Where do pigs sell? In the middle of the chart. That's why I hate buying in the middle of the chart. It just literally just doesn't work out half the time. I like buying on support, or buying the breakout is fine too, right? Let's say you were buying the breakout here. That would have been buying off of this kind of like 47.78 on the first breakout, and then holding break even though. That's the difference between the breakout trade for me. You got to hold on break even there. On the support one, you can sell some on the rip and still hold break even far away from the action. All right, guys, we'll see what happens here. Now it's you got the bounces. Now it's more, did they hold the VWAP pullbacks? So that's what I'd be looking at on a lot of charts. VWAP pullbacks, do they hold them now? SOXL, you can see how it's right on the VWAP right now. Do they hold that pullback VWAP, give you another move to the upside? SPY holding in well, and one of the things I'm watching is the 1 minute 9 EMA, and it's holding pretty well there, guys. Look at the pullbacks, 1, 2, 3 holds, right? And so now I'm just looking at like 568. If that holds, SPY continue to just climb the wall of worry. Next spot to look, 569 takeout. We'll see if we get through there, and Tesla start to keep climbing and keep climbing. Seemed like not a bad one to look at to take a trade today. And this was also another one on my playbook, long Tesla, and I went TSLL short here on this one. Should have been just looking for the play against the market, right? Tesla was showing me up. Should have been taking that nice little flag pattern.
Yeah, it was that was just wild relative strength to see in Tesla. That actually really surprised me.
XLP continuing to push there today too. Just to note that you're still getting consumer staples pushing for sure.
And if we do the heat map, most things here, go grab this. Oh, you got it. Yeah, most things here are gray. Gray just meaning up or down less than 1%, so nothing happening. You see a lot of that going on. And then if you take that out, you still don't see too much, right? Tesla up kind of big, you know, JP Morgan, Nvidia down a little bit. And that makes sense, right? Zoom out on the market, and we are right near the close, right? So, you know, again, always important to zoom out in these levels. We are kind of flat on the day right now, right? Nothing really has happened on either end here. So, yes, that was an amazing potential buy if you had gotten that AVWAP, but we still haven't done anything. So now what I'm looking for, like Mitch kind of mentioned, is if we pull back here and, you know, we hold VWAP or we hold this 566 level, That's interesting to me. Now, I said that yesterday, and I ended up not getting a trade because of it, because we just ripped. But we'll see if that ends up being the same thing today. I think the success or failure of this kind of intraday swing idea, where I take a setup, I document it, I kind of walk away, and then the system closes me at 10 to 4, like it always does, is really going to be the entry, right? Is picking the direction correctly, but just making sure you get a decent kind of risk reward type entry there. Now, when it comes to some of these moves, AMD would have been that 1-to-1, so that would have triggered out, but that's coming back. GM, I didn't quite get filled. My profit target was a little bit lower, and that didn't get filled. And then I have SLNO, and SLNO just hasn't done anything since its move. I actually have to check the news on this, make sure it's not a buyout or something. No, so it's just a bunch of upgrades, it looks like. So just a little bit of a flat day for me so far, as I just wait for one of these things to end up working out. But taking the trades, and whatever will happen will happen. Trying to get more zen with it and less trying to force things. GME, yeah, this looks like this could be a short, because it didn't participate in the market at all, that market bounce. And so if the market rolls over here, this seems like the first candidate to maybe potentially take a short in, just because it couldn't get involved in the rally, so will likely probably get involved in the sell-off.
All right, guys, locking up the platform before I start going into full tilt mode. So we'll see what happens there, guys. But VXX getting a little bit of a jump there. SPY pulling back a little bit there. I'm done. No more ammo, no more powder for the day. Close it up. If not, you start pushing it, really pushing it. So that's done for me. Definitely not what I wanted to do, especially like looking for the opening trade. That could have gave you the powder to go for a trade like this, but now you just got to sit on the sideline. And these are the worst days where you're going to sit on the sidelines, because these are the days where you can make a lot of money, like yesterday. Perfect day also, right? And if you burn out too early yesterday, you miss those big moves, right? This is why I think it's important to always keep a little bit of that risk that you can use to try to keep pushing on the day, right? So pushed a little too strong today and paid the price for it. We'll see what happens here towards the end of the day. And Tesla still holding in there pretty well. We'll see what happens. GM kind of pulling back a little bit there. Like I thought, Ford is the one that's coming down that I feel like is really dragging. And I felt it had no business being back at 1050s this pre-market. I mean, we're back to $10 here. Already dropping from the pre-market high about 5%. We'll see what happens there in Ford.
Feels like a lot of what the automakers here, right? Sell the news, or in GM's case, buy the news type of events. Like everyone knew this stuff was coming, right? So you get the initial kind of knee-jerk reaction that freaks everyone out, and then you go, okay, now it's time to, now it's time to kind of come back to earth here and realize that, yeah, that's what we expected to happen.
Yep. Another thing is maybe watching the auto manufacturers that will also get hit, like Toyota Motors, right? And continuing to watch that chart today. Could be a good watch.
What is it? AN AutoNation? What about these parts manufacturers? Yeah, they're getting hit a little bit here too. So these might be. There's a couple of these.
Yeah, you continue to watch it. I'm watching the used cars, the Carvana. Look at the liftoff in Carvana today. Now, this is one that I'm continuing to watch. It's right back to the 9 EMA 200 support, really clear as day, and a nice little wick through in the morning where you got this breakdown through the support of 197 and then a quick recovery, 195.65 on that. And look how quickly you're back to 206. So I like Carvana, man, as being one of those names to look at for the used car trade. Hey, you know how that one goes.
Look at that from... right, breaks, undercuts VWAP, just exactly what we're looking for. Back through VWAP, gets right to the second 2-day VWAP, and then chills. Right?
Maybe it's just for the hourly support. Maybe we can just use some type of support level. We can just let the computer look at this pre-market low, undercut pre-market low, back above VWAP, risk off of intraday low. Boom.
Yeah.
Right.
No, so, I think that makes sense, and I think that's important what you just said, because that's how traders think, right? You know, real traders aren't, right? This is, you know, trying to figure out each stock and what it's going to do next. But that kind of just blurb that Mitch gave there, just a good job of that's the beginning of a potential systematic trading strategy, right? Here's the entry. Here's what I'm looking for. Here would be the entry. Here would be the stop loss. And then you take that and you start to build it, and you start to test it, and you start to, you know, you buy a small account, as you can see above. $47 gets you a tiny account, but who cares? You put $1,000 of your 5K account in each trade, and you go from there. And if it ends up working, then you pass that account, you take a couple bucks from it, and you buy a bigger account, so on and so forth. And again, those are the steps. I mean, first you come up with the idea, then you find a way to systematize it. And then when it comes time to trading, you just let the robots work. Right?
Here, add one more to the caveat. What about on stocks that specifically have done an outside ATR move the day prior?
Okay, that'd be a good way to. I feel like I should be writing this down, but yeah, it's a good way to filter, because
right? Because you need a lot of filtering in a trade like that, because if not, you're going to have thousands of occurrences, and then that just doesn't help either, right? And you need to find some type of way of signaling what are the type of ones that I'm looking at. Carvana is a perfect example of that. Yesterday went 24 points when the ATR was 17, right? So it's starting to go outside of that realm. So we're looking for extreme moves, and then the next day trying to catch some of that extremeness to maybe reverse, essentially, right? And so that's some part of the psychology into it. But that's just one way to look at it and use an indicator to try to describe exactly what type of stock you're really looking for. So we can look for stocks like that and see if we can start to back test and see if we expand it to another level. So.
Yeah, and again, that's the idea, is that you'd sit down in the morning and you'd make your list, same as you see me do with these gap fade setups. You'd make your list and say, okay, these are the you know, 10 names or 5 names or whatever. I'm going to let the computer look for an entry on, and then, you know, so again, I talk about it all the time. Step 1 of automation is just have it alert you. And you can see this little box I have up here. If I'm risking $200 on the SPY position, this would be, I take 89 shares right now. Obviously, this changes based off the high or the low of the day, but I can show you guys. I don't think I can actually, but down below, I just have this chart here 5 times across my screen with all of the different setups that I have there. And so when I get the alert, I just look down. It says take X amount of shares. Right, so AMD, for example, just triggered. So I still don't have buying power because none of those other positions have resolved. But it says, okay, if I want to risk $200, I would take 225 shares. I just punch that into Trader Evolution, put out the stop loss, put out the profit target, and walk away. Right, 99% of the work, in my opinion, for trading should be done when the market is closed. You're waiting for. You're just
coin interesting. Right? Coin interesting. I don't know how Bitcoin's doing today, but yeah, doesn't look too bad there. See what happens. All right, guys, I'm going to take like 5 minutes. I'll be back. And then at 10:30, we got some interviews coming at you guys. So I'll be right back here. We'll see what happens here. Goldman Sachs is sitting on that 560. SPY like kind of going sideways here, but still trying to give the ability for a kind of like 5-minute 9 EMA, still holding well. And so that tells me more and more, as long as we can stay sideways up here at the top, that's fine. Like that's more of what I expect. Sideways and then another rally, sideways, another rally, sideways, another rally. That's what I'm looking at here. We'll see what happens. I think you continue to watch it, and look how NVIDIA is not making its way right back towards the 110.50. I think that's a good sign to continue to watch to see if Nvidia can keep pushing. And then, of course, Tesla keep pushing. Tesla's right now up to 179, but still could hold here, recover 280s, and then just keep chugging along. So we'll see what happens. GM's pulled back a little bit there. Ford breaking through the low, now 992. That one's struggling a little bit more. XLF actually doing pretty well, back above 50. So that's an area that I'm also looking to see if there's some strength can come in. The 90 MA held there, and the VWAP, the anchored VWAP from the low of the financials, never even came close. So that's a good sign. The 90 MA there held really well today. 49.78 is the 90 MA on the daily. We went to 49.78 on the downturn there for XLF. So if there's an area where I see some strength, XLF definitely. XLI is not looking bad either. Nice recovery back, but I need to see that one make a move back above 135, which is 134 is kind of your neckline area to 135. A strong move above 135 could be that convincing breakout for the industrial space.
Yeah, again, the SPY is getting super interesting here. The level I'm watching is right up here. Yep, we see the 2-day VWAP. It's the yellow line right here. So this is the average price for today and yesterday. And then we also see the pre-market high, and that's both sitting around 569.80, say 570, pretty close enough to 570. So if we're going to grind higher, what happens when we get there? And then if that ends up breaking, then it's back at this high with the VWAP there, which is now a little bit below. So that's like 575. That'd be a big move on that potential trade. So again, I hope I've converted everyone to an AVWAP person. And if you ever end up running across Brian Shannon, you say, hey, I heard of your AVWAP. Just make sure you say hi. It's a good friend of mine. Because at least this time, right, the 30-minute chart came right to the anchored VWAP from the high, and then pulled right to the anchored VWAP from the low, and then bounced. So two amazing trades potentially could have been had there. That will probably then be a strategy down the road, something to add to the arsenal. Right, just look for things at night that are at major AVWAP zones, set alerts for them, and see if they're going to bounce. See if you can take a trade from them. So. Just summary on the two ones I got on. I got GME, or sorry, GME is right there. It's triggering me just seeing it. GM, again, bought it kind of right in this area, so about flat-ish on that position. Came close to a profit target, but missed it there. Might start doing these in parts or something, but came back a little bit. So we'll see what happens from that name. And SLNO, flat on that one too, right? Took that short right there. So a little bit flat on both those. So just a do nothing day so far. Speaking of GME though, right, the fact that this just can't get going at all when the overall market is doing something, that to me is very, very interesting. Right? You would expect some participation, some amount of rally on this name when it came to the overall market ripping like it did. I set it off when I took the trades and the buying power for one, either AMD or GME, and I took AMD or GME, and AMD would have definitely hit that profit target and been out. So it's now to the point where this strategy is donezo for me. It's that first half hour, maybe 45 minutes, if that. So I can just actually go and delete these alerts now because I don't need them anymore. I just delete these every day, and then I just reset them every day. And then this one too. CRVO triggered, but then fell back. Okay. So this is one that we were watching. Again, it came from a swing trading system that I use, right? The buy price was at 10, obviously not a good swing trade. And then we're just watching trying to see if maybe we can get an interesting price to get back involved. So I'm looking at this price. So I'll set that again. And if we get back through that zone, that'll be a little trade that I take. So 775 and then like maybe 715 stop. Again, just looking for ideas for longer term potential trades, longer term swings to make throughout the day. Just to have something to set and forget is the best way I think to put it, right? All right, back looking at the market, and we are rejecting a little bit here. So we got to this pre-market resistance, not quite the pre-market high, but this pre-market resistance. We're pulling back just a little bit there. GM pulling back a little bit more, so now down on that position, but then SLNO up on that position. So feels like it's probably going to be one of these things is going to work well, and the other one's not. It will be a slight net positive on the two of them, and that will be it for the day. But just grinding again. I really think that we'll likely test this today. It'll be interesting to see what happens when that occurs. One thing that was interesting is just look at this sell-off that we've had in copper today. Copper just reduced like entirely there, where was looking for some kind of move there in copper, but we didn't actually end up getting push there at all. I was looking to see if this bounce, if you look at the daily chart, right, copper looks really nice, but putting that big topping tail yesterday and then selling down there in copper today. Sorry, that's
all right. Looks like some little pullback could happen here. We'll see if it breaks 567. Kind of a layer that I could see it pulling back to, but right now just kind of hanging in here, and doesn't look bad. At least you just got to watch those lows, right?
Yeah, we got a long way to go to get there, that's for sure. But yeah, everything's kind of bleeding just a little bit here. Even though the SPY is not doing too bad, that copper again, was just chatting about that, but that's 2.3% down in copper today. Copper is generally important and something I watch because it's you build things with it, right? So if it's going to do well, then you're going to look to. It indicates a strong economy or it indicates a weak economy, right? Is this the big thing that people look for in copper? So there's Bitcoin. So there's Bitcoin futures. They're bouncing a little bit less. So it's just showing us that this isn't necessarily a tech. Actually, if you look on the heat map, tech is down. Electronic tech and technology services down. But then we've got retail, we've got healthcare, durables. All these things are green. Finance is actually kind of mixed here. So yeah, more of a just kind of a 1 hour performance. Yeah, so tech not doing well over the last little bit, but then we have a lot of these other sectors that are just doing a-okay. So it's definitely one of those, not a tech rally today, that's for sure.
Yeah, I don't expect it to be. I feel like that's the area where you're going to get the chop. And I think that's the area that a lot of focus keeps going to. If I just keep it simple for me, I'm watching financials, I'm watching industrials. Today, leading the action is defensive and communication services, and they've been hot. Communication services 2 days in a row. Like a stock that I thought would turn around, AT&T. Look at that thing. Thing's strong. People looking for dividends. That's the only reason why they go buy an AT&T. And look at the action that you're seeing there, right? That's a continued trend. Did not expect to see it, right? If anything, I was looking, will they turn this around with the market rallying? Would they go away from this, right? Like sell out of that? And well, no, I don't. To see more positioning in that. And so I don't know. This is interesting. Verizon pushing too. There's a big gap to fill, but it's going for that gap fill. It's a big one too. It's a big gap to come back and fill, but it's working for it.
Yeah, so is that an earnings? Looks like probably an earnings thing.
And then XLP doing pretty well there. Let's see, XLC. Communications coming back there.
Yeah, the thing with XLC that kind of muddies the water on that one is I think it's got Google and some other. It's got Meta
Netflix.
or something in it. Yeah,
Yeah,
it's
it
got
has
some weird.
Netflix, Google, Meta. It's like,
Yeah, it's got.
yeah, this is why I tell you guys that I don't like those whole spiders. Like, right? Like everyone refers to those. I refer to them because that's the only thing people look at. Because unfortunately, people don't look at too many equally weighted ETFs anymore. I know that you take a look at a lot of times those,
Oh, I love them.
Michael,
Yeah.
but there's a reason why. Because I'm trying to find where the strength is. I don't want you to kind of twist that strength to
Mhm.
just some names, right? Because that's what ETFs have a tendency of doing. If I'm making one, I want to twist some of the negative, right? And be more positioned into these high flyers that I know will stay strong even in a bad market, right? And that's what I see a lot of the times where it's just a fooling, it's like a fool you type of stock where like you've mentioned about how certain stocks were doing well yesterday, but tech names were really the ones that were dragging. The big boys were dragging the indices down, right? Things
Yeah,
like that are very important to catch.
the biggest culprit of this, the worst of the worst, is XLY. Between
Yeah.
Tesla and Amazon, it's like 50% of XLY is Tesla and Amazon. So it's like you're not that's not really a consumer discretionary. You'd think consumer discretionary. You'd put some Apple in there, and I don't know, Harley Davidson, and they're in there, but just the weightings of them, it's just it's Tesla and it's Amazon. It's again, equal weight I think is a good way to do it, and then also just more frequent rebalancing as opposed to like annual rebalancing. Start to
Yeah.
rebalance these things monthly, or hell, even do it weekly. Like, why not? It's commissions for the company that does this, the spider company, would be free. So it would only create a little bit of a drag. You could do it completely algorithmically. But yeah, I think that's the biggest culprit. Like if you remember during the GameStop craziness, right? The
All right, my friend.
GameStop,
I'm
maybe
gonna hop out right
XRP.
quick. I know that you'll be starting up your interview really quickly here too. So I'll be
Mhm.
right back, guys. Like always, you guys enjoy the interview here by Michael. I'm gonna let him take lead, and I'll be
Yeah.
back. Like always, guys, have fun. I'll be.
Peace. All right, guys. So yeah, we are. Let's just go quickly, do a summary of the market, and then we'll take a break. Interview my buddy. Gonna preach to you guys just like I do about systematic trading as opposed to just drawing lines and guessing and all that kind of stuff. So I think it'll be a lot of fun. So yeah, just to keep you up on the market, we had that massive undercut and rally in the SPY, trapped a lot of people into the short side. Now we're ripping to the long side. We're getting close to, again, the 2-day VWAP and pre-market high. Interesting area that a lot of traders may take a look at. But let's do this. Go full screen before we pull on stage. So yeah, another interview. We're trying to bring you guys traders of different styles and different mentalities, right? We've had AI developers on here. We had Anne Marie, who's just a seasoned pro when it comes to the market. And now we're going to bring on my buddy Dave Mabe. So just a bit of a, I don't have anything written down, so just a bit of what I know about him to get started with. But former CTO of Trade Ideas. So if you ever use Trade Ideas, he's either to praise or to blame on a lot of the functions there, depending on where you go there. Most importantly, and the reason that I brought him on is so we do a podcast called Line Your Own Pockets. It's just the whole point is just to focus on the systematic side of trading. I know a lot of people here aren't going to be quants or algorithmic. A lot of you guys play, the lower float kind of crazy stuff, but I think Dave's got some. I think Dave does as well. So there'll be some interesting kind of lookaways there. But the idea is always to get a little bit more systematic with your trading, if you can. And again, that's what we're going to chat about a little bit here with Dave. So without further ado, I didn't even ask. I'm just throwing you on stage here. Hey, Dave, how's it going?
Hey, Michael, how you doing?
Doing well. It's funny because I'm introducing you guys, but I just talk to Dave every week, right? We do our podcast on Fridays. So we're usually just like this, chatting about something we have prepared, but in this case, we don't really. So why don't you just tell the folks a little bit? I gave you a little bit of an intro there, but tell the folks a little bit about yourself and then we'll see where this convo goes.
Yeah, I've been a trader for 20 years now. I've been a systematic trader for 15 of those. Um, yeah, I started trading early. I was sort of investing earlier than that, and my time frame just got shorter and shorter. And I've been day trading for that whole period. Yeah, my back test or my trading sort of turned the corner when I started back testing and getting more systematic, like like we talk about every week on the podcast, Michael.
Mm.
I just realized there's a huge difference between uh, getting in a trade and not knowing how you're gonna play it, like how you're gonna exit. You're making decisions in the moment during the trading day. That's uh, very emotional. Like people come to me and tell me about, hey, I've got all these emotions. How do I get it out of my trades, or how do I get it out of my trading to improve? I'm like, well, you don't really have a plan. Imagine the difference between not having a plan, like trying to figure out in the moment how you're going to exit a trade,
Hmm.
versus having a plan to begin with. So there's no confusion about what you're going to do, no matter what happens in the trade. That's like you're trading a script then. Like you following a script. That's a completely different trading experience.
Yeah, and it's funny because one of the reasons I wanted to get you on here is because I've been systematic from the swing trading side of things for a while, but on this show we focus a lot on the short term time frame, right? So Trade the Pool's prop firm that gives traders capital for an intraday basis based off a lot of their trading. So a lot of the people here are pursuing that. They're trying to pass these challenges and get funded and to have a system go throughout. So I just wanted you to talk a little bit about your aha moments or processes when it comes to systematic trading, because I came into this and I always knew that, okay, this is what I do from the swing trading side of things. It's very systematic. It's very, I know what on Sunday night all the trades that I could potentially take for next week, and I should do day trading the same way. But the kind of path to get here has been a little rocky, and trying to figure things out along the way. So when you got into this, you mentioned that your time frames got shorter and shorter. What really just kind of turned the corner and said, okay, I need to let robots handle as much of this as I can. I'm not the one who can just sit there and get an idea and punch in the trade myself. What was that moment that you're like, okay, I'm getting a robot I'm outsourcing my trading. I'm going to be the idea guy.
Yeah. So the very first strategy I traded, I found online. It was a guy that was blogging about it. I was like, that sounds pretty good. So I started trading that system. And I realized after trading it for a couple of years, and it was doing well, but there were some kind of arbitrary decisions he'd made about it. And I was like, well, why? Because I would ask him, all right, so why didn't you take trade XYZ today? And he's like, oh, well, the relative volume was below X, whatever it was, whatever the rule was.
Mhm.
And like, well, how'd you come up with that rule? And he's like, well, it just feels right. Or he didn't say it in those words, but I could tell there was no scientific process around deciding if that rule was in there or not. So just over time, I realized, okay, I'm trading this system, but it could be way better. I could trade a lot more trades if I looked and sort of systematically figured out what the rules should be and maximize my total profit. I had, I wasn't running out of buying power very often, so I knew I had some room to take more trades. And uh, I just set out to systematically figure out those rules. And uh, the other thing I did was uh, I created a program for myself to take the trades. When you do that, that opens up a whole new set of possibilities because imagine I was trading like a 15-minute time frame. all of a sudden I could trade a 5-minute time frame or a 3-minute time frame and get a lot more trades because I had a system that was a program that was entering the trades for me.
Mhm.
So all of a sudden my capacity got a lot greater and I could be more choosy about the trades I was taking. So yeah, it was just really whole new worlds of strategies opened up that I hadn't considered before, just because I couldn't click trade and take all the trades that I wanted to.
It's funny, I laugh a bit because when we were on air earlier, I said, "Oh, I ran out of buying power," and I said, "Well, Dave's gonna say today," and I was like, "Dave's gonna think that that was a good thing because
Yeah.
that's one thing I know that you mentioned in your blog there." And just FYI, if you go to Dave Mabe's website there, I'm gonna link something in chat in a second, but he has a kind of a free little course to take about systematic trading, and I went through it, and I think it's really worthwhile. Um, yeah, so the idea was that you looked at this guy and he was doing well. So he had some sort of system that he must have tested probably the old school way, which is, you take a bunch of trades, you record your results, you see what's
Yeah.
doing better. But then you looked at that and you said, well, if I start getting into, if I back test this, or I get a little more scientific about how I'm picking this, well then from there, instead of just leaning on this guy's experience, I can get a little bit crazier when it comes to uh, you know nailing in which filters are working, which filters aren't. And then the other thing that you mentioned there that I think is really important is you want to up the amount of occurrences. Now, for the viewers, why is that so important to be able to trade as often as you physically can across a strategy when you get there?
Well, do people like money? I mean, that's if you could get, imagine if you found a really good system and it trades once a month, say.
Hmm.
And then let's say you find another system and it trades once an hour. Like, which one do you think has more capacity? Which one do you think is going to be more successful? Which one do you think you're going to be able to improve at a faster rate using? Like, it
Yeah.
doesn't make sense to me to, and I could see this when I first started trading. I could see this because I was following somebody that was, uh, he was swing trading. He was holding for sometimes 30 days or more. And I would take some of the trades, and it was actually a pretty profitable system, but, I'd be looking at my watch and pretty much looking at the calendar. Like, gosh, it's
Hmm.
gonna be years could go by before I really determine if this strategy has edge or not, and much less improving it. But, compare that to taking many trades a day, you're gonna get so many more at bats, and you're gonna understand so much more about what works and what doesn't work. There's if you have a good system or a good process in place, you're journaling your trades, you're going back and look at the big winners, you're looking at the big losers, figuring out patterns. There's just no way you're not going to improve at a much faster rate.
Well, yeah, and to be honest, it's one of the reasons why I started here and I started down the day trading journey, not to replace the swing trading, but to find more additions to it. Because what you're talking about is that if you have a slight edge, say you're just remove commissions and slippage out of the thing, and you've developed a system that's right 60% of the time, right? When you're right, you make $100. When you're wrong, you lose $100. Well, why not do that as often as you can, right? Assuming you have the bankroll to withstand the loss. So from day trading and then into swing trading and then into investing, and this is where I know me and Dave have a little differences because he's only a degen day trader and I want to do a little bit of all of it. You're exploiting that edge more often. So if you, again, the way I look at it is if you develop multiple systems across multiple time frames, then you're just always exploiting an edge. You have that opportunity to be doing it. And then we can talk about different security types as well, right? You get equities, and maybe you get a prop firm for CFDs, which is what the parent company of Trade the Pool does with the fivers. You can develop these systems, but I think a lot of people hear that and they say, okay, this is how do I do it all, right? Things like mental fatigue and all of that. But I know what your answer is going to be, but then how does someone deal with that? Say, they're having a problem, even emotionally, doing a couple trades a day, and you're saying, well, do 10 times that. What's the answer there? What's the system?
Well, it's always good to have a reference to compare yourself against. So for discretionary traders, that's your trade journal. And when I
Hmm.
say journal, I don't mean like a diary where you're keeping track of what you eat and how what's your personality type and what you ate that day. I mean a database of your trades. So you can go back and quickly see, all right, let me sort it by the most profitable trades and look at those. How can I create more of those? How could I capture more of those in my system? Um, it's always good to have that reference, and a back test is the ultimate reference. There's only two ways to gain confidence in a system. One is to trade it routinely, and you just gain experience over time.
Hmm.
The second is to back test it. You can go back and see, simulate the strategy over a long period of time, and it's sort of a shortcut to that trading experience. And the real powerful way to do it is to have both of those. So, figure out or how do a back test for a strategy. You're going to learn a lot doing that, and then trade it as close as possible to the back test as you can. And every day run the back test and compare. How did I do compared to the back test? That's a really powerful thing to be able to reference. It's sort of like a kind of like a barometer that you're comparing yourself
Yeah.
against every time. It's a really
Well,
powerful way to trade.
Well, and I love that, and I think that's a big key too, because a lot of people come in every day and they look at their P&L and they said, if I make money, it's a good day. If I lose money, it's a bad day. And that's a really bad barometer because if you're faithfully following a system and that system should have lost that day and you lost that day, you should look at that and say, okay, right, that's just a normal potential drawdown in my system, and then vice versa, right? If you made money and your system made money, then okay, that's the way it goes. So you're using your back test and your system to gauge whether or not the results are good or bad, as opposed to just using something arbitrary like, did I make money or did I lose
Yeah.
money today? And I think that's just a huge way to do it. So, um, you know, at Trade the Pool, I know there's mainly discretionary traders. So let's ease them into it. Let's say, okay, we're lowering you into this world, and we did an episode on this, and I thought it was great about what are the first steps. So you're someone who's right now and you're fully discretionary. You're doing all the work and you're entering all the orders, and you've got the 17 monitors with a billion different charts on it, and you're squinting for try to find the setup on each of those charts. What would you say is kind of step one to that person to say, okay, take this step and this gets you, maybe 50 of the way there, 50% of the way there to be
Yeah.
automated. And then, as your career goes on, you can start to work further down that road.
Yeah. So I'm actually working with a trader now who is going down that same path, and he made a very good first step into backtesting, and I'm helping him get to the next level. And the way he started was he would just come up with a theory. This is a pretty simple opening range breakout system,
Hmm.
and he would come up with theories about it. And then he would just go back, look at a chart, go back over 30 days and keep track of, okay, how would this entry thing that I came up with, how would that have worked yesterday? How would it work the day before? How would it have worked the day before? All the way back 30 days. And he kept track of it. And he would make slight iterations on that to try to improve it and sort of do the same thing. So it really is, that's exactly what a back test is.
Hmm.
He was just doing the back testing manually. And I think that's a great start because it gets you in the mindset of, okay, how can I make this better? You're really, back test is it's a simulation to get you confidence to actually make the trades. because over time you're going to know that your system has edge if you do this, right? And you're not just trading randomly. So I'm helping him now take that and do a more systematic and more programmatic back test where he can get many years. So we've got 10 years of history to look at now, and really dive in to figure out, okay, what matters in the system? When should you be trading the system? When should you ignore it?
Well, and the beauty of what you said there is that now he also has that, if he was to start trading it or even paper trading it or whatever, he has that framework. It's only 30 days, but he already has that framework of, what was my P&L at the end of the day, and then what would the system of he has that thing that he can go back and he can kind of compare himself to. And doing that, I think, makes such a huge deal. And then kind of the next step that I'll talk to the people about that I've been doing here is, automating the alerting of it, right? So that you don't have to watch the 8 million charts and get really, mentally and emotionally exhausted by the end of the day. And that's, I think, a big step too. So you have the idea, you have the setup, you've done some amount of testing, either with a back testing platform or manual, and then you've got to start trading them. So ideally, right, you get to a world where Dave's at, where I quoted this, and I think it's right, that you don't ever manually kind of push the button to say buy here or sell here. And it's probably been many years before since you actually, that actually is a good question. When's the last time that you, not because you had to get involved because something broke, but you're like, I want to buy this stock and I'm going to hit a button to buy that stock at that time?
Yeah, I try not to do it, but there is a case where I do that, and that's when I'm seeing a pattern that I think could be a system, and I kind of want to sort of go through the motions, taking a trade with small size to sort of feel how it's going to work out.
Yeah.
And so I will do that, but always the goal is to do that temporarily to get a feel for, okay, is this really going to work? Is this worth putting in the effort to go through a back test and figure out if it has edge compared to other things I'm working on. So I will do that in that case. But yeah, it's always okay. Once I get it to a point, I'm always going to be executing it programmatically.
Yeah, and that's what I've been telling people, and that's what they've been watching me as I go through this journey. It's coming up with an idea, right? Trading it for a little bit in with small size and in these trial accounts in which you can do, and then when you get to the point that something is working, your next thing should be, okay, how do I not have to be the one to do it, right? What can I do to eliminate that? So what I started with there is the first one is alerting, right? So the viewers here have seen me build a little Pine script system that says, it alerts when an entry is taken, and then it gives me the size that I should do for my proper risk management, and all of that is sorted. So I don't need to think about that. It says, okay, AMD has hit your price. You should buy it. You should buy 200 shares, because if you get stopped out, that's the risk you do. And I think that's a really good step one. And the reason for that too is something like PineScript. I don't know how to code it. I just went to Claude and said, this is what I'm trying to do.
Yeah.
Can you do this for me so that I can get these alerts? And then I spent a couple weeks just kind of going back and forth with them, doing it live, and then writing down feedback and going back to the AI and doing that. So what do you think of that for step one of a trader?
I love that because it gets you in the mindset of, a lot of people believe they trade a system, but going through the process of creating an alert for it is really valuable, because you may realize, oh, well, there's a little bit of fuzziness there that I need to track down, and creating a rule, an alert for it is going to help you with that fuzziness. So any sort of discretion or gut feel, creating an alert is going to like force you to come to grips with that and make decisions that you may be making during the day now, but you don't realize it.
Yeah, because as soon as you're getting it into the code and you're getting it on paper, you'll know what it lacks, right? So for me, it was a lot when it came to things like profit targets. I realized I was just taking profits where I kind of felt that here's the time to take profits, but now setting up second alerts to say, no, this is your profit target. Don't do anything until you get that alert. And again, this helps. And I think it's a good, call it like a gateway drug to systematic trading, where there's a lot of people out there who get just really terrified about the idea of a robot taking control of actually entering the orders. And what I say to that is you'll get used to that in time. Just wait. But this is, I think it's a good way to get you started to say, okay. And then I think what you'll do is you'll find, this is a story I always tell for when I was trading before. My wife was actually one of the ones that pushed me in the direction to trading a robot. Came into my office one day, I had my feet up on my desk, and she's like, well, what are you doing? I'm like, well, you see that box there? It's got nothing in it. And I said, when that box has something in it, I'm just going to go over to my platform and push a couple buttons to take a trade, because I was just waiting for an alert window to just print something and then taking a trade. She's like, well, couldn't you just get a robot to do that? And it was just one of those like duh moments, right? Like, yeah, I probably could. So then I wouldn't need to I could be doing something else, as opposed to I have to be sitting here intently watching that thing because I can't miss the fill. So yeah, alerts are always a step one. And
Yeah.
I feel like we're burning through little mini podcast episodes, but I'm gonna do a little boat face because we've got this question. And again, we have a whole big rigmarole about what backtesting platform to use. So
Yeah.
I think more than that, I'll say mine, but I think more than that is, let's just do a quick list of the things that we talked about what you need to see from a backtesting platform. So for myself, I use Realtest, and I do that mainly because it's built on multi-system trading. So the idea from the ground up, it's designed as you're going to trade multiple systems, which I do. I will say the limitation to it is that it's end of day only data. So you can't do anything when it comes to, scanning for intraday systems. But, I know we'll go through, I've got a couple things that I really need from a back tester. And I know Dave has a couple things that he's added to that. And that's actually, brought into my trading as well. But for me, it's, I don't want ever a single stock or a single equity or single indexy test. That to me is kind of useless. And when that I'm talking about, Trading View and TrendSpider and all these that have pretty decent back testing engines, but you can only do one security at a time.
Yeah.
Which I get, it's not the end of the world if you're only trying to trade a futures contract or something like that. But the downside I really think there is that you should, if your system works, it should work on a basket of securities, and you should be able to test that entire basket at once. Because like we talked about earlier, you want to, when you have an edge, you want to exploit it as much as possible. So you're talking about an opening range break. If you had an opening range break strategy on the S&P 500, well, then why not add, maybe a basket of the most liquid securities in there and test that thing across that instrument and see if it works, because then you may be able to take 10 trades a day instead of maybe one or two. So for me, that's the biggest thing is multi-strategy testing, and then also multi-security testing.
Yeah, I think those are very important. I like Realtest a lot. I use AmaBroker, which is sort of like Realtest, but for intraday data. I need intraday data. There's a whole. The other thing I look for is it needs to be completely customizable. So, I need to be able to look at the nitty gritty and the details of how it works and customize how it works. So that brings me to AmaBroker. The other one is Trade Ideas. It's the fastest on the market. The only problem is it's a 90-day backtest window. I use that for a lot of prototyping. So I'll look and see, okay, because I know it's fast. I know it's really easy to come up with a strategy, really easy to test it. So I'll use that as a prototyping tool and then figure out, okay, this has some edge over the 90 days. It's probably going to be worth the work to use AmaBroker to do a longer term back test that I can be more confident in.
Yeah, and I think the last thing that we mentioned, that again is something that you're building a product for, and something that really helped me out, is it's the ability to export whatever columns you want. And the reason for that we'll talk about in a little bit, but that's a good optimization feature where you'll go through and you'll say, okay, I'm gonna take these opening range breakouts, and then with all of those trades, you can export things like the 200, the relationship to the 200-day moving average, or the relative volume on time of entry, or whatever metric that you think could potentially affect that strategy. And then from that, you get a report, and you can do things manually where you could go through and just say, okay, let me remove all of the trades from above the 200-day moving average, and let's see what happens. But Dave's actually working on something pretty cool that I think the premise behind could actually help users as well, and that has to do with some fancy machine learning optimization. So why don't you talk a little bit about that, and also more broadly about the idea of optimizing strategies?
Yeah, so I do have what I think is a unique process for backtesting. I go over that, I go over all the details in the email course, which is free on davemabe.com. It's a 6-day course that walks you through exactly which backtester you should use, and here are the reasons why, and here's why you may want to use one over the other.
Mm-hmm.
A big part of my process is like an opening range breakout you mentioned. First thing I do is create a backtest that has literally no filtering. So every opening range breakout. And I use that as a starting point. Now, I know I'm not going to trade all those, but I start with a backtest of that. And then I figure out, okay, under what circumstances should I be taking these opening range breakouts? So I whittle that down. So maybe it's, 10 or 20% of the original set that I know has a strong edge compared to the remainder of the set. And those are the ones I take, and then I ignore the others. I think a big part of trading is figuring out what not to ignore. Like
Mm-hmm.
your default should be like, there's so much garbage out there, so much data. Your default should be to ignore everything and then
Yeah.
figure out what you're not going to ignore. I think a lot of traders do the opposite, where they're always looking for this data point and watching stuff all day long that could affect their system, when like you should take the opposite stance.
Yeah, and optimization gets really interesting, because what Dave's talking about there is his original system could have couple 100,000 trades in it. It could be a whole lot of data. And with that data, you can start to ask a lot of really interesting questions like, okay, so I've got, a couple 100,000 trades in it. So if you have the right data points, then yeah, it's just asking questions at that point. You can go to the data and kind of speak to it like like an AI or something. And you can use a lot of AI for this, and machine learning and things like that, where you can say things like, what if, right? What if the gap is this amount of ATRs versus that amount of ATRs? Or, what happens if it's this amount of relative volume or that amount of relative volume? And then again, you get to the point where, like we talked about, there's a lot of people out there that are making a lot of trades kind of seemingly randomly, or they don't have a really defined edge that they can point at and say, here is all the data that supports the fact that I should hit the button right now and take this trade. And I think that's where a lot of people fall into a lot of trouble, because they're not in that kind of zone to say, yes, this is something that I the I'm trying to say the kind of the emotional standpoint of, I can take this trade knowing that regardless of what happens to this trade, I know that I've looked at 100,000 trades and I filtered them down to maybe 10,000 trades,
Yeah.
and there is an edge there. So even if this one trade doesn't work, I no longer care. Because we were talking a little bit about the other day with other users who were saying things like, oh, I'm really frustrated because I missed this trade, or I'm really frustrated because I did this thing. And when you're looking at numbers in the hundreds of thousands of trades, that one trade, all of a sudden, it affects you way less than it did before.
Yeah, and it doesn't even have to be 100,000 trades. Just by having that reference, like when you're in a drawdown, question is, okay, is this normal or not? You can go back and say, okay, yeah, it is normal. I can continue to trade knowing that, okay, in the long run, I know I'm doing the right thing.
Yeah.
So it reduces the importance of any specific trade or specific day even?
Yeah, it definitely helps with the emotional side of things. So guys, I hope you like this chat. I hope I'm slowly converting the audience here into becoming systematic nerds and coming up with ideas to start testing, coming up with ways to, at the very least start setting alerts, if not setting out, advanced order types and stuff, which we didn't have time to get to, but that's a whole other chat. But if you want to hear more about this kind of trading, again, the two places I'd definitely check out is the name of the podcast called Line Your Own Pockets. It's me and Dave once a week, just going through this entire thing. We probably went through, what would you say? Each of those topics was probably a podcast or two in and of itself. So really diving deep on a lot of those podcasts. And again, davemabe.com for, access to that course and some other cool stuff that he's bringing. So listen, Dave, I know it's good to have you on here, even though we're just going to tomorrow at the same time be talking about the same stuff. But I'm glad I could show you my people, and I'm glad my people could see that I'm not alone in the world ranting about how trading should be more systematic and less us caring about what GDP did to the market this morning.
Yeah. Well, thanks for having me on. I really appreciate it. I've been looking forward to this. So yeah, I'm glad it worked out.
Awesome. Well, thanks a lot, Dave. I'll go back and just summarize the people of the market. And again, go check out davemabe.com for all that stuff, and I'll chat soon.
All right. Thanks very much. Bye, everybody.
All right. Now we're wrapping up here, but let's just do one quick look over on the overall market and just take a look at what happened here. Oh, look, I didn't know I could do that. Oh, geez, you don't need to see me that big. Why don't we do this more? You can see the chart. But the beauty of the time that we do these is nothing's really happened here too much in the market. So you can see we blew right through the 2-day VWAP and the pre-market high right there, just knocked right through it. So another one looks eerily similar to yesterday, where we broke that zone right there and then we crashed all the way back down. Now we broke the pre-market low and then we rallied all the way back up. So looking at the daily chart, if we closed like this is a pretty interesting pattern where we came down, we touched that AVWAP from the low right to the tick, and then we just rallied her right up. So very interesting look, very good look there on the market. So we need to see basically this zone hold. So for what I'm going to be watching when I check in on the market after some nice food, walking the dog, is, are we holding above this zone? If we're holding above this zone, then yeah, I think we're probably in for a little bit of a trend day. If we're back below this zone, then it might just be consolidation. If we're back below VWAP, then again, we got to watch the lows for that potential reversal. So, I appreciate everyone come by. I hope you like that interview. Again, Dave's a close friend of mine and someone we talk a lot about this kind of systematic trading with. So again, if you're interested in more of that, I'm going to be talking about it here. We're going to be talking about it there. And you can definitely come along with my journey as I try to take everything we talked about there from a systematic point of view from my swing trading world, and then put it into the day trading world as well. So thanks everyone for coming by. We will talk to you all on Monday.